My outward supply is taxable, so I can take ITC on my inward supply. Same way, my outward supply is used for business purpose. Can I take ITC on my inward supply? Yes. So inward supply used exclusively in taxable outward supply or business purpose, ITC available. I have some inward supply which is used exclusively in exempted supply or non-business purpose. Non-business purpose means what? Personal purpose. Can I take ITC? No, I should not take ITC. Inward supply, what if it is used for both taxable and exempted? I can take ITC. But how much ITC I can take? Proportionate ITC. Same way, when inward supply is used for both business and non-business purpose, then also proportionate ITC is available. Okay. And what is this proportionate ITC? How we will take this proportionate ITC? Simple. We have common ITC. Common ITC means what? Common ITC means with respect to both taxable and exempted we are using. So common ITC is say 1,20,000 and my exempted turnover is say 40 lakhs and my taxable turnover is say 60 lakhs. My exempted turnover is 40 lakhs, taxable turnover is 60 lakhs. So total turnover will be 100 lakhs. This is my total turnover. Okay. And what we need to do is that first, how much is the ITC availed? ITC availed is this 1,20,000 we can take as ITC. 1,20,000 we can avail as ITC minus ITC reversed. So don't take the proportionate ITC. First take the credit and then reverse proportionate to exempted. Proportionate to exempted we need to reverse. So 1,20,000 into what is the exempted? 4 by 10. 4 by 10 will be the proportion related to exempted. So 1,20,000 into 4 by 10 is 48,000. If I reverse 48,000, the balance is net eligible ITC. Net eligible ITC will be 72,000. So this is called as proportionate ITC. This is called as proportionate ITC. And sir, why can't we take this directly 1,20,000 into 6 by 10? 1,20,000 into 6 by 10 is also 72,000 only. Now, sir, directly we can take. Yes, while doing MCQ you can do like that, but whenever you are writing, this is the way in which we have to do as per law. So first we need to take ITC, then we need to reverse the ITC, then it is called as net eligible ITC, that is 72,000. This is the process to be followed. So that is this about proportionate ITC, and all details will be given in the question itself, like how much is exempted, how much is taxable, how much is for business, how much is non for business, everything will be given. Only thing you need to just do the computation. If you have an idea, that is sufficient. So what are the 4 points that we discussed? I have inward supply used for taxable or business purpose. Can I take ITC? Yes. I have inward supply used for exempted or non-business. Can I take ITC? No. When I have inward supply, partly taxable, partly exempted, I can take proportionate ITC. Inward supply, partly business, partly non-business. Can I take ITC? Yes. Proportionate ITC I can avail. And where we will group zero rated supplies. Even though in case of zero rated supplies, the burden of GST becomes zero. Why burden of GST becomes zero in case of zero rated supplies? So that part we need to understand. Just keep this page and take place of supply chapter. Take place of supply chapter. In that you can see zero rated supplies, like that one concept, which is in page number 74. Which is in page number 74, zero rated supplies. What are considered as zero rated supplies under GST? So you can see that in section 16 of IGST Act, there are two supplies which are regarded as zero rated supplies. Number 1, export of goods or services. Number 2, supply of goods or services to SEZ unit or SEZ developer with respect to authorized operations of SEZ. This is called as zero rated supplies. Now, can I take ITC on my inward supply when my outward supply is zero rated? Yes, just now I told you zero rated supplies are categorized as what for ITC purpose? Taxable, which means can I take ITC on my inward supply? Yes. For example, I am exporting some goods and for that goods I purchase raw material. Can I take ITC on the raw material? Of course, yes. I can take ITC on the raw material, but that is subject to blocked ITC. I can take, definitely I can take. If it is blocked ITC, I cannot take, but otherwise I can take. Now I have two options. Option number one, what I will do, I will pay IGST on outward supply. Whatever is my outward supply, on my outward supply I will pay IGST, and by utilizing the ITC, and I will get the refund of gross IGST. This is one option. For example, you say this, I have made some inward supplies. Okay, so Mr. A is an exporter. Mr. A is an exporter and he is making export of goods, and there is some inward supplies. There is some inward supplies. The value of these inward supplies is say 10 lakhs plus GST of 1,20,000. Okay, whereas exports is somewhere like 30 lakhs plus, and this 30 lakhs is excluding GST at 12%. Okay, now this is the situation. Mr. A is an exporter and Mr. A is having some inward supplies of 10 lakhs plus GST 1,20,000 and is making an export of 30 lakhs excluding GST at 12%. In option 1, what will happen? In option 1, they will pay GST. How much is the GST payable? So gross GST. What is the gross GST? That is 30 lakhs into 12%. So gross GST is 30 lakhs into 12%, that is 3,60,000 minus ITC. How much is the ITC they have? 1,20,000. How much is the net amount they pay? Net GST. How much is the net GST they will pay? 2,40,000. And what is the refund that they will get? The refund that they will get will be 3,60,000, which means whatever the gross IGST that they will get as refund. This is IGST because it is export now. So 3,60,000 minus 1,20,000, 2,40,000. Even though they pay 2,40,000, but they get a refund of 3,60,000. What is the logic behind it? Simple. At the time of purchase, they paid 1,20,000 na. At the time of purchase, they paid 1,20,000. That 1,20,000 also they will get refund. At the time of export, they are paying 2,40,000. That also they will get as refund. So total 3,60,000. What happened to their burden? At the time of purchase, they paid 1,20,000. That also they got as refund. At the time of sale, they are paying 2,40,000. That also they got as refund. What is their tax burden? Zero. That's why it is known as zero rated supplies. Is it clear or not? The burden will become zero. Then next, option 2. In option 2, what will happen? You read there in option 2. You understood option 1? Option 1 says pay IGST on outward supply. So they are paying 2,40,000. The 3,60,000 minus 2,40,000 by utilizing ITC and get refund of gross IGST. What is the gross IGST? 3,60,000 they got as refund. Option 2, don't pay any GST on outward supply. On their outward supply, they don't have to pay any GST. Means on export, there is no GST. Means what is the gross GST payable? The gross GST itself will be zero. Gross IGST will be zero. They will not pay anything. But what will happen? And it is under bond or LUT. They will export it under bond or letter of undertaking. Bond means one stamp paper they will execute with the government. LUT means promise on, President of India. Other promise like that we tell na, like that. So President of India promise that I will export like that, we will make a promise, that is called as LUT. But get the refund of ITC with respect to GST paid on inward supply, that is inputs and input service, but not capital goods. Now in this case we don't have capital goods, we have only inputs. So how much is the refund in this case? Therefore refund equals to 1,20,000. Now what happened to the burden? At the time of purchase, they paid 1,20,000. The entire 1,20,000 they got as a refund, which means that there is no burden at all. Again, it is zero rated. So these two options are available. Why two options, sir? One of the disadvantage in option 2 is that credit refund is not available on capital goods, but otherwise both the options are same. They have given two options. Whichever option you want to choose, you can choose that option. Okay. So, but in both the options, what happens to the burden of GST? Zero. You understood how the burden became zero? First option, whatever I paid on inputs, that is 1,20,000. Whatever I am paying on sales, 2,40,000. Entire 3,60,000 I got as refund. In second option, I am not going to pay anything on outward supply, but on inward supply, whatever 1,20,000 I paid, I got as a refund. Means both the cases, the burden becomes zero. That's why it is called as zero rated supplies. Even though it is zero rated, but for the purpose of ITC, what is it treated as? It will be treated as taxable supplies. So that's why we can take ITC with respect to that. That is this. Next, look into another point. Section 17 subsection 3 talks about the meaning of exempted supplies, but this definition is only for the purpose of ITC, not in general for payment of GST. In general for payment of GST, what is the meaning of exempted supplies? Only three: notified as exempted, nil rated, non-taxable. You just turn the pages and go to supply chapter. In that supply chapter, we discuss meaning of taxable supply, meaning of exempted supply, zero rated, non-taxable, like that one table is there. Above aggregate turnover definition. Can someone tell the page number, please? 17. Page number 17, 17. You can see the meaning of exempted supplies there. Page number 17. And what is that? It is given as exempted, notified as exempted, notified for non-payment of GST. So notified as exempted, nil rated, non-taxable. Can you see that? Those three are the meaning of exempted. For what purpose? For the purpose of payment of GST. That is one exempted turnover definition. Again, here also we have meaning of exempted supplies. But this is for what purpose? Not for payment of GST, but while computation of ITC. Means this definition you need to use only for ITC computation, not in general. Is it clear or not? So in general, meaning of exempted is notified as exempted, nil rated, non-taxable. That already we studied. So this also you see, first three same, correct? First three same, notified as exempted, nil rated, non-taxable. Am I right? But apart from that, we have some more activities which are treated as exempted for ITC purpose. What are they? Supply covered under RCM. When my supply, outward supply is covered under RCM, it is treated as exempted for ITC purposes. That's the reason why I told you author cannot take ITC on their inward supply because their outward supply is covered under RCM where publisher will pay GST. Same way, GTA cannot take ITC on their inward supply because GTA's outward supply is covered under RCM. So due to that reason, they cannot take ITC on their inward supplies. So here, what we need to understand is that if my outward supply is covered under RCM, I don't have the liability. That's the reason why I cannot take ITC on my purchases or inward supplies. That is this. Okay. So supply covered under RCM means supplier of RCM supplies cannot take ITC. But you are recipient, you are paying the RCM liability. Can you take the ITC? Yes, you can take ITC. Supplier only cannot take ITC on their inward supplies. Then next, number 5, sale of land. Land is first of all not a supply, but for ITC purpose it is treated as exempted supply. Same way, building. Sale of building is not a supply, but for ITC purpose it is treated as exempted supply. So which land? Is it before obtaining completion certificate or after obtaining completion certificate? Which land is excluded from supply? Which land is excluded from supply after obtaining completion certificate? Even though it is not a supply, but for ITC purpose it is treated as exempted supply. Even sale of securities. Sale of securities neither goods nor services, am I right? But it will be treated as exempted supply for the purpose of ITC. Then supply of warehoused goods to any person before clearance for home consumption. So warehoused goods under customs sold, if you remember, exclusion from supply, spelled slow in the W, warehoused goods. I imported the goods, kept the goods in warehouse and I transferred the document to you. Now you will clear the goods and pay customs duty. For me, it is excluded from supply, we discussed now. That's not a supply, but for ITC purpose it is treated as exempted supply. What is the intention here? Why these 4 transactions, even though it is not a supply but treated as exempted supply? Why? What is the benefit that government is going to get? So there is a very big intention, criminal intention that they have. I'll tell you what is that intention. Say this. There is, like already we did one situation here. So in this question, if you see, what is my common ITC? 1,20,000. What is my exempted turnover? 40. Taxable turnover 60. Total turnover 100 lakhs. Correct? Now, in this, suppose if there is a sale of land, and that sale of land is say 40 lakhs. Sale of land is 40 lakhs. Already I have some exempted turnover. Correct? So this is my regular transaction. Apart from this, the sale of land is there. So what is the common ITC in that illustration? Common ITC 1,20,000. And what is the exempted turnover? Exempted turnover is 40 lakhs. Exempted turnover is 40 lakhs. And taxable turnover is 60 lakhs. Now there is a sale of land. Actually, sale of land is not a supply, but what happens because of this? Because of this, what happens? My exempted turnover to total turnover ratio, if you see, exempted to total, exempted turnover by total turnover. What is the ratio of exempted turnover to total turnover? Exempted turnover is now 40 plus 40. Why 40 plus 40? Even though sale of land is not a supply, but it is treated as exempted, and therefore 40 plus 40 divided by what will be the total? 40 plus 60 plus 40. So that will be 80 divided by 140. So numerator also increased by 40, denominator also increased by 40. Now what is the ITC availed? What is the ITC availed? ITC availed is 1,20,000 and minus ITC reversed. What is the ITC reversed? ITC reversed will be 1,20,000 into 80 by 140. Sir, numerator and denominator just increase by 40. Why it will affect? Definitely it will affect which mathematics you are talking about. So when you increase it by a constant, definitely the ratio will change. Okay. So therefore here what will be this? 1,20,000 into 80 by 140. 68,571 will be gone. What is the net eligible ITC? Net eligible ITC is 5429. In the previous example, what was the ITC I was enjoying? 72,000 ITC I was enjoying. Got it? 72,000 ITC I was enjoying. Only 48,000 got reversed. And because the sale of land, which is not a supply, when added to exempted supply, what happened? My ITC reversal is 68,571. More ITC I am reversing, and I have less ITC for utilization against my liability. You understood the criminal intention here. What is that? Even though not a supply, when you treat it as exempted supply, your ITC availability will come down. Mainly for that reason, they have created these 4 transactions which are not a supply as exempted supplies. What are those 4 transactions? Number 1, sale of land, sale of building. That too, when entire consideration is obtained after completion certificate, entire consideration is received after obtaining completion certificate. Next, sale of shares. Number 4, sale of warehoused goods under customs. But what should be taken as its value? As these activities are not a supply, the value needs to be determined here. For the purpose of ITC, what should be taken? For land and building, always in income tax we have one value now. What is that? Stamp duty value. That only we will take here also. So see there, in case of land, stamp duty value. Building also stamp duty value. But for securities, we will not take the full value of securities. How much ever we are selling, out of that 1% will be taken as the value here. So in such case, value shall be deemed to be 1% of sale value of that security. And in case of warehoused goods includes sale of goods by this duty-free shop in an international airport. In an international airport, there will be a duty-free shop. That duty-free shop is also treated like a warehouse. when they are making sale to incoming passengers, that is treated as sale of warehoused goods under customs, but it is not a supply. However, for ITC purpose, it will be treated as exempted supply. Let's see its implications. You can see here, there is a duty free shop. Where is the duty free shop located? That duty free shop is in an international airport. To whom they are making sale? They are making sale to outgoing passengers and incoming passengers. Outgoing passengers means those who are leaving the country. Those who are leaving the country. This sale by the duty free shop, if you see in many international airports, you will see a lot of shops now inside, and those shops are called as duty free shops. And if they sell to outgoing passengers, that is treated like export, zero rated supply. That is treated like zero rated supply. So we will get the refund of ITC. Whereas incoming passengers, those who are coming to India, they will buy. Maybe they will forget something to bring as a gift. And when they are coming to meet people here, definitely they need to buy something, because otherwise, so people will be expecting like they are coming from abroad and they will get some gift, etc. and all. No one will bring gift from there and all. So they will buy here in the duty free shop. So that's where duty free shops will be making sale to incoming passengers. Okay. And whether it is treated as supply or not treated as supply. Not a supply. Why not a supply? This duty free shop is like a warehouse only. And when they are selling to incoming passengers, it is sale of warehoused goods under customs, because that incoming passenger is going to pay the customs duty, baggage duty, like that one concept is there. So he is going to pay that. Even though it is not a supply, but for ITC purpose, so for this duty free shop, it is treated as what? It is treated as what? Exempted supply. This is sale of warehouse goods under customs, but it is treated as what? Exempted supplies, which means to sell in this duty free shop, they will buy some goods locally, on which can they take ITC? Yes, but full ITC they cannot enjoy. Why full ITC they cannot enjoy? Proportionate to zero rated turnover they can take, proportionate to the sale to incoming passengers they cannot take. For example, 60% is sold to outgoing passengers, 40% is sold to incoming passengers. How much ITC they can take? Only 60%. Why they can take? Because when my outward supply is zero rated, I can take ITC on my inward supply. When my outward supply is not, taxable, that is exempted, I cannot take ITC on my inward supply. So proportionate to this, ITC not available. Is it clear? Mark this chart as very important, because this was an amendment for last to last exam, but they have not tested it. So there is a possibility of asking question on this. Next. So we understood now the meaning of exempted supply. Total 8 points you need to remember. So what are they? First three, general meaning of exempted: notified as exempted, nil rated, non-taxable. Next one, supply covered under RCM. Next 4, even though not a supply, treated as exempted supply. That is sale of land, sale of buildings, sale of securities, and supply of warehoused goods under customs. Now there are 2 more points you need to remember separately, that even though it is exempted, but for ITC purpose it will be treated as taxable. Means we can enjoy the ITC on inward supplies. See there, what are they? Service by way of accepting deposits, extending loans or advances, in so far as the consideration is represented by way of interest or discount, is exempted, except in case of banking company, financial institution, or NBFC. If you remember, in banking services we discussed this. Interest on loans, advances, deposits is exempted, correct? We don't have to pay GST. Even though it is exempted for payment of GST, but while doing the computation of ITC, don't put it under exempted turnover, put it under taxable turnover, so you can enjoy the ITC. Is it clear or not? Yeah, when my outward supply is taxable, I can take ITC on my inward supply. What is my outward supply? Interest income. Actually, interest on loans, advances, deposits is exempted. I cannot take ITC on my purchases, but for the purpose of ITC, they are telling you treat it like taxable. Even though it is exempted, you treat it like taxable, so that you can enjoy the ITC on your purchases, even though your outward supply is exempted. Got it? Like an exception they created. But what is the use of this exception? There is no use, because my interest income will be very less. For all the businesses, the interest income is other of other income, correct or not? So very nominal amount only it will be there. But to whom interest income will be more? To whom interest income will be more? Bank, financial institution, NBFC. For them they should give na, but for them they have not given. See there, except. To whom really required they have not given. Except in case of banking company, financial institution or NBFC. For them it is not treated as, like taxable. For them it is treated as exempted only. Okay. Now say this, that is, there is a trader, and that trader is having taxable turnover 8 lakhs and exempted turnover 8 lakhs, exempted turnover 2 lakhs. Okay, exempted turnover 2 lakhs. Interest on deposits 1 lakh. That person is having interest on deposits 1 lakh. Now the common ITC means what? Used for everything. The common ITC is 1,20,000. Now tell me what will be the eligible ITC? Come on. So ITC availed 1,20,000 minus ITC reversed. Tell me how much is the ITC reversed? Formula 1,20,000 into exempted by total. What you will take as exempted? 2 plus 1, 3 only 2 only 2. And then 1 lakh will be classified under which place? Taxable. So it will be taken in total. What is the total? 11. So 2 by 11. 1,20,000 into 2 by 11. Please reduce. 1,20,000 into 2 by 11. 21,818. 21,818 needs to be reduced. So remaining will be net eligible ITC. 1,20,000 minus 21,818, 98,182. You understood or not? Even though this 1 lakh is exempted, actually this 1 lakh is exempted, but we did not keep it under exempted. We kept it under taxable. You understood? That is what they are trying to convey. Suppose if the same question, same as above, but they are a bank. Same as above, but they are bank. Then same as above, but they are bank. Then what will happen in that case? In that case, boss, ITC availed. What is the ITC availed? ITC availed 1,20,000, no change, minus ITC reversed. How much will be the ITC reversed? 1,20,000 into what by what? 3 by 11. Why 3 by 11? Because for bank, financial institution, NBFC, interest on loans, advances, deposits will be treated as exempted only for ITC purpose. So 1,20,000 into 3 by 11. What is 1,20,000 into 3 by 11? 22,007. 32,727. If you reduce, you will be getting net eligible ITC. The net eligible ITC will be 87,273. Understood the difference? So for others, same question, but for others 98,182 is the ITC they are getting, but for a bank it is 87,273. So this is what, okay, the difference. See, I gave you this illustration to make you understand the difference between the treatment, okay, but definitely why for a bank the taxable turnover will be 8 lakhs and all. For a bank the taxable turnover will be less, the interest income only will be more, okay. But just for example we are trying to understand this. That is the meaning of this first point. You understood this first point? Then second point, generally sale of duty credit scrips is exempted. What is this duty credit scrip? Duty credit scrips are given under foreign trade policy, and these are like vouchers, coupons, etc. and all. Government will be giving this for exporters. What they can do with that? They can either use it for payment of customs duty or they can sell it to others. So when they are selling it to others, basically it is exempted. I have a duty credit scrip. Who gave me the duty credit scrip? Government of India gave me the duty credit scrip. So what I am doing, I am selling it. When I am selling it, actually for payment of GST it will be exempted. No need to pay GST. But while computing ITC, where it will be kept? It will be kept under taxable turnover, which means I can enjoy the proportionate ITC on my inward supplies. Is it clear or not? So now, apart from those 8 points in the previous page, these 2 points you need to remember. What is that? If even though it is exempted, but it will be treated as taxable for ITC purpose. What are those 2 transactions? Number 1, interest on loans, advances, deposits other than bank, financial institution, NBFC. Number 2, sale of duty credit scrips. Okay, and this is not an area which is tested in exam so far. So there is a possibility of asking question. That too I am expecting a question on this area. That is this sale of goods to incoming passengers by the duty free shops in international airport. Then this. Look into the next one. So 17.1, 17.2, 17.3 is about this. So far whatever discussion we have made is about these 3 subsections. Now we are moving on to 17 subsection 4, special provision for availment of ITC by banking company, financial institution, including NBFC. So there are 2 options. There are 2 options for a banking company, financial institution, NBFC. Option 1 is proportionate ITC option. Just now we discussed now. Whatever we discussed now is the proportionate ITC option that we have discussed. Like total ITC minus used for exempted. That is total ITC into exempted turnover divided by total turnover. That is the proportionate ITC method. But this proportionate ITC method will be difficult for a bank because every month they need to calculate what is their exempted turnover, what is their taxable turnover, etc. That's why a simple method has been given to them. That simple method is option 2, avail 50% of the eligible ITC. So 50% of the eligible ITC option. In that 50% of eligible ITC option means what? That is flat 50% is treated as their exempted turnover, flat 50 will be treated as a taxable turnover, no need to do computation, 50% you enjoy the ITC. That is the idea behind this ad hoc option. Is it clear or not? So what are the 2 options for banking company? Either proportionate ITC option or ad hoc ITC option. But there are some differences between this option 1 and option 2 which you need to understand. This part can be tested in exam. Carefully listen. In option 1, that is proportionate ITC option. In proportionate ITC option, what they are telling, if you have some inward supply used for taxable outward supply, means a bank is purchasing something which is used for their taxable outward supply. If it is proportionate ITC option, can they take full ITC? Yes, they can take full ITC. If a bank is having some inward supply which is used for providing their outward supply which is exempted, can they take ITC? No, they cannot take ITC. When the bank is having some inward supply which is partly used for taxable, partly used for exempted, can they take full ITC? No, they can take proportionate ITC. Even if they are receiving inward supply from their distinct person. Example, HDFC Bank Tamil Nadu receives service from HDFC Bank Karnataka. In that case, can they take full ITC? No, it's a common ITC. So proportionate only they will take. Understood? This is under which method? Proportionate ITC option. Again I am repeating, inward supply used for taxable outward supply, full ITC. Inward supply used for exempted outward supply, no ITC. Inward supply used for both taxable and exempted, proportionate ITC. Inward supply from a distinct person, proportionate ITC. This under which option? Proportionate ITC option. Whereas option 2, ad hoc ITC option. In ad hoc ITC option, they are telling that whether it is used fully for taxable, fully for exempted or common, everything will be 50% only. Is it clear? Fully used for taxable also 50% only you take. Fully used for exempted also 50% you take. Common also you take 50%. That is the advantage of 50% ITC option. We will not divide anything. Full into 50% we will take. And inward supply from distinct person alone we will take 100% ITC. Can you remember these 2 options? Option 1 like a regular one. So far what we discussed. Option 2, what is the difference? Fully used for taxable, fully used for exempted, partly used for taxable and partly used for exempted. Also we will get only 50% ITC. Inward supply from distinct person, 100% ITC. What about blocked credit and inward supply used for non-business purpose? Under both the options you cannot take that. Blocked credit no one can take, and used for non-business personal purpose no one can take. That is normal. Okay, so that is this. You can read this. In case of option 2, inward supply exclusively used for non-business purpose and blocked credits, ITC should not be availed. 50% compute on remaining ITC, including used exclusively for exempted supply and used exclusively for taxable supplies. In case of option 2, this restriction of 50% shall not apply to tax paid on supplies made to another registration within the same entity. That is this. Inward supply from distinct person, don't take 50% ITC, take 100% ITC. Sir, when we should decide these two options, option 1 and option 2? I have to decide in the beginning of the financial year. Option once decided will be applicable throughout the financial year. Option once exercised cannot be withdrawn during remaining part of the financial year. Means yearly I need to choose this option. Before commencement of the year itself I need to decide either proportionate ITC option or ad hoc ITC option. Then, so this banking area not that much asked in intermediate exam, but that is also an untapped area. If they want to make a question on that, they can make. Now look into the next area, which is a very, very important area. Repeatedly it has been tested in exam every attempt, that is blocked credits. Blocked credits means what? There are some inward supplies on which ITC cannot be taken, that is called as blocked credit, even though it is used for business purpose. These blocked credits are broadly divided into 3 categories. Category number 1, motor vehicle related block credit, and then category number 2, construction related blocked credit, and category number 3, other blocked credits. Okay, so these are the various block credits that we have. Now let's start with the first one, motor vehicle related block credit. So motor vehicles are classified into 3. Motor vehicles for transporting persons, what will come? Two-wheelers, autos, cars, buses, all these things will come under for transporting persons. Vessels and aircrafts. Vessels and aircrafts means, so this aircraft and ship, that will be coming. And then others. What are other motor vehicles other than these two? Other than for transporting persons, vessels and aircrafts, what are other motor vehicles used for transporting goods? What are they? Lorry, truck, bus already covered here. Bus is used for transporting people only, not goods. In bus, which goods will be there? How much ever big you may be, you are not called as goods, you are called as person only. Got it? So goods are. Bus is not coming under goods here. So lorry, truck, bulldozer, all those things will be coming under other motor vehicles. Can we take ITC with respect to that? Yes, there is no restriction on that. Definitely we can take ITC. Example, trucks, lorries, etc. Got it? And why? First of all, they are giving a restriction for motor vehicles, because motor vehicles capable of being used partly for business purpose, partly for personal purpose. So it is very difficult to ascertain whether it is used for business purpose or personal purpose. For example, a chartered accountant will buy a car. Definitely, can you guarantee that he will be using 100% for professional purpose only? No, he may go for a marriage function, and for marriage function or shopping when he is going, definitely he will take his family and go in that car only, correct or not? So how can you say, will you install a CCTV camera inside the car to check whether he is using for business purpose or personal purpose? Very difficult to determine. That's why they are telling ITC not available. But lorry, truck and all definitely cannot be used for personal purpose. No chartered accountant will take a lorry and go to the marriage function or shopping. Visualize the scenario na. Tata Ace and all, if they are taking for a marriage function, so nice, like family, come on, get in. And so we cannot take na. So therefore, purely that is used for business purpose only. That's the reason why ITC is given there. Understood the reason? Next. For transportation of persons, again divided into 2. Capacity does not exceed 13. Capacity exceeds 13. when capacity exceeds 13, definitely no one will use it for business personal purpose. Capacity exceeds 13 means what? Buses, correct? Buses. While doing capacity, whether we need to include driver seat? Yes. So far in all the discussions we have made. So first I told you omnibus. Omnibus is excluding driver greater than 6. And again we discussed renting of motor vehicles. There also in renting of motor vehicles, that is hiring of motor vehicle greater than 12 passengers, that is also excluding driver. But in this place, when we take capacity, I did not use the word passengers, I use the word capacity. Capacity means that includes driver seat also. So greater than 13 means tempo travelers, buses, etc. No one will use it for personal purpose. They definitely use it for business purpose only. That's the reason why they have given ITC in that case. ITC available. Example, stage carriage, contract carriage, buses for transporting employees. But capacity does not exceed 13 is a blocked credit. Even though you are using for like partly business, partly non-business, etc. and all, they are telling it's a blocked credit. It's a block credit. However, in 3 exceptional cases, they are giving ITC. What are those 3 exceptional cases? Number 1, further supply. Further supply means what? I am a dealer. I am buying cars and selling cars. Can I take ITC on the car purchase? Yes. Even though car is a motor vehicle for transporting persons, capacity does not exceed 13, but it comes under further supply, so I can take ITC. Second example, I am into the business of renting of motor vehicles. I buy a car and give it on rental. So can I take ITC on the car purchased? Yes, because car purchased, even though capacity does not exceed 13, but it comes under further supply. Further supply means what? Either sale or rental or lease, etc. and all. So it may be any purpose. I can take ITC if it is in further supply, because supply definition includes everything na, sale, exchange or rental, license, lease, everything. Okay. Then number 2, suppose if I am using it in the business of transportation of passengers, means who? Travel agencies, Ola, Uber or travel operators, etc. They can take ITC used in the business of transportation of passengers. Number 3, imparting driving skill, that is driving schools. Driving schools also can definitely take ITC. Again I am repeating, motor vehicle for transportation of persons, capacity does not exceed 13 is a blocked credit. However, if it is covered under these 3 cases, ITC is available. Okay. Now, vessels and aircrafts also, these 3 exceptions are there. Generally, vessels and aircrafts are blocked credits, ITC not available. However, in these 3 cases, they are giving ITC plus extra one more point they added, used for transportation of goods. Then ITC will be available. Okay. I'll give you an example. You answer this based on this chart. There is a chartered accountant who purchased a car used in his purely profession. Can he take ITC on the car purchased? No. Why? First, car is a motor vehicle for transportation of persons. Capacity does not exceed 13. First exception, further supply. No, he is not renting that cars, or he is not, second exception, not using it in the business of transportation of passengers. Not that he will take the car to income tax office and while returning he is not using it like a share auto, Ananagar like that. No, he is not doing that. And number 3, driving schools, whether he is teaching the article students A for accelerator, B for brake, C for clutch like that. No. So that's why it is not covered under these 3 exceptions. So ITC available or not available? Not available. Is that clear? Then next, another example. So a company purchased a bus for transportation of its employees. Can they take ITC on the bus purchased? Yes. Why they can take ITC on the bus purchased? Because capacity exceeds 13. So definitely they can take ITC on bus purchase, no restriction. Then next one, next example. There is a courier company, say Blue Dart Couriers. That Blue Dart Courier purchases an aircraft for transportation of courier parcels. Can they take ITC on the aircraft purchased? Yes, because aircraft used for transportation of goods. Then another example. There is a diamond merchant. The diamond merchant purchases an aircraft for transporting the diamonds from one location to another location. So can he take ITC on the aircraft purchase? Yes. Even though they are not in the business of transportation of goods, but they are using that aircraft for transportation of goods. So definitely they can take ITC with respect to aircraft purchase. Then Reliance Industries Limited purchased an aircraft for use in the directors to transport the directors. They purchased the aircraft. Can they take ITC on the aircraft purchase? No, not covered under further supply, not used in the business of transportation of passengers, driving skills or transportation of goods. So ITC not available. Other cases, so ITC not available. Understood this chart here? Now look into the next chart related to motor vehicles. First one is purchase of motor vehicles. Second one is service in relation to motor vehicles. What are the services in relation to motor vehicles? Total 4 services. Repair and maintenance services, insurance service, authorized service center service, hiring, renting and leasing of motor vehicles. These 4 in relation to motor vehicles, vessels and aircrafts. Hiring, renting, leasing means what? Taking motor vehicle on rent. Servicing means what? Authorized service center services. Insurance means on vehicles we take insurance, not that. Repair and maintenance means we go to the workshops and we will give the vehicle for repair, that repair and maintenance service. These 4 services in relation to motor vehicles, vessels and aircrafts. If the motor vehicle, vessel and aircraft is eligible for ITC, if the motor vehicle purchase is eligible for ITC, on the service also they can take ITC. If the motor vehicle purchased is not eligible for ITC, they cannot take ITC on these 4 services. Okay, let's try to understand with an example. There is a Ola Uber driver who purchased a car, and that car they gave it to a service center for doing the servicing. Can they take ITC on these service charges that they pay? Yes. Generally when they buy car, they can take ITC because they are using it in the business of transportation of passengers. As car purchased is eligible for ITC, even on this repair and maintenance service also they can take ITC. Got it? Then next, suppose if there is a company which is purchasing a bus for transportation of employees, they can take ITC on the bus purchase. Now that bus they are taking insurance. Can they take ITC on the insurance also? Yes. As the bus purchase is eligible for ITC, insurance service is also eligible for ITC. Then next, another example. So the chartered accountant who purchased the car, so for his business purpose cannot take ITC on the car. Now that car he gave it for repairs to a workshop, and the workshop raised him repairs invoice. On the repair invoice, can he take ITC? No. As a car purchased is not eligible for ITC, repair and maintenance also ITC cannot be availed. Is it clear? And then suppose if there is a director of a company, so who wants a luxury car to be used, okay, and the company purchased the car for transportation of its director. Now can they take ITC on the car purchased? No. Select Rolls Royce or Jaguar or Land Rover, like that big cars are there. So if they purchase that car, can they take ITC? No, it's not covered under exceptions. What if instead of purchasing the car, they take the car on rental basis? Can they take ITC with respect to that? Yes. As the car purchased is not eligible for ITC, renting also not eligible for ITC. What? Yes, sir. Podalanga, yes, sir. So everything you tell, whatever I say, yes, yes, yes. Okay, like this you should tell during articleship to your principal. Okay, yes sir, like that. Okay, don't tell here yes, use your brain. As the motor vehicle purchased is not eligible for ITC, renting is also not eligible for ITC, because hiring, renting and leasing is also given as blocked credit. Are you understanding? When they buy the car for director's transportation, can they take ITC? No. So therefore when they take the car on rental also, they cannot take ITC. Understood or not? That is this 4. Come on, what are the 4 services? Repair and maintenance, insurance, servicing, hiring, renting and leasing of motor vehicles. Okay, if the motor vehicle eligible for ITC, ITC available on these services. If the motor vehicle purchase not eligible for ITC, ITC not available on those services. Now look into some special points in this regard. While determining the capacity, whether it is including driver seat or excluding driver seat, definitely including the driver seat. Further supply includes purchase and sale of motor vehicles. That is, motor vehicles used in the business of renting, hiring and leasing. Both are covered. Correct? I told you. Further supply means what? Further supply means what? Sale of motor vehicles or renting of motor vehicles, because supply is generic term. Next, repair, insurance and servicing of motor vehicle received by a general insurance company is always eligible for ITC. That is, so I purchased one car, and as soon as I purchase that car, I will get a insurance also by default. First year I will get a insurance, and I gave that car to my wife to drive. She drove and she went and hit one vehicle, and because of which completely front bumper and all gone. Now what I will do? I will take it to the service center. Now the service center will do the entire repair. Will I pay money? No. Insurance company will pay the money. So the bill is raised to insurance company. Can the insurance company take ITC? But the car is not theirs. Car is mine. But they gave the insurance. So can they take ITC? Of course, yes. Of course, yes. That is this point. Read that. Repairs, insurance, and servicing of motor vehicles received by a general insurance company is always eligible for ITC. But remember, the invoice should be in the name of the insurance company. If the invoice is in my name, but insurance company has paid, insurance company cannot take ITC. The invoice should be in my name or insurance company name, insurance company name. In this regard, they have given one circular, that's an amendment you can see here. That's an amendment. In the next page you can see May 25, one newly added circular is there. Whether ITC is available to insurance companies on the expenses incurred for repair of the motor vehicle. Whether ITC available to insurance companies on the expenses incurred for repair of motor vehicle, okay, for which there are different types. First, there is a reimbursement mode of claim settlement. Reimbursement mode of claim settlement means what? First, the insured will pay. First, the insured will pay. After the insured pays, the insurance company will reimburse the insured. Is it clear or not? Now, in this case, even though insurance company is not making the payment directly to the garage or workshop, they can take ITC, but only condition is that invoice should be in the name of the insurance company. Insurance company can avail ITC even though expenses initially incurred by the insured. However, invoice for repair should be in the name of the insurance company. Is that clear? But sir, insurance company did not pay to workshop. Is it okay? Yes, it's okay. 180 days condition will not come there, because generally we need to make payment to supplier within 180 days. That problem will not be there, because in this case, even though insurance company is not making payment, but the insured has already paid. So due to that reason, it's okay. Insurance company can take ITC. Are you getting this? That's what they have given in the circular. Next. Repair cost is beyond approved claim. What is this? Say repair cost is somewhere like 80,000. In that, insurance company says we will bear only 60,000, because some parts, usually plastic parts and all, not covered under insurance. Only metal parts only covered under insurance. Plastic parts and all will not be covered under insurance, that we only should bear. So 80,000 rupees is the repair cost. 60,000 borne by insurance company, 20,000 rupees borne by insured. Now tell me, how much ITC can the insurance company take? Only proportionate to 60,000. So ITC to the extent of amount reimbursed by insurance company, but not the entire repair cost. Understood? Which means out of the total bill 80,000, what is the ITC pertaining to 60,000? That much only they can take ITC. Got it? Even though entire bill is in the name of the insurance company, they cannot take full ITC, because they did not pay to the insured full amount. To whatever extent they bear the cost, to that extent only they can take ITC. Then, what if the invoice is in the name of the insured? Insurance company cannot take ITC. Insurance company cannot take ITC. But can the insured take ITC? Yes, provided the motor vehicle purchased is eligible for ITC. Got it? Because see this, insurance is there. Insurance is blocked credit. Yeah, insurance is blocked credit. But if the motor vehicle purchase is eligible for ITC, on this insurance also they can take ITC. But definitely insurance company cannot take ITC. Why insurance company cannot take ITC? Because a condition for availment of ITC is not satisfied. Understood? Now, related to this particular circular, I gave one question on amendment, you see. Page 58, question number 16. Page 58, question number 16, question on amendments. Take the workbook and see. Question number 16. ABC Insurance Limited provides general insurance services for motor vehicles. A customer, Mr. Sharma, has a policy with ABC Insurance. His car was damaged and he chose a non-network garage for repairs. Non-network garage for repairs means usually they will pay first and thereafter the insurance company will reimburse. Okay, incurring a total repair cost of 1 lakh. The insurance company approved a claim of 80,000, which ABC Insurance later reimbursed it to Mr. Sharma. Scenario number 1. The garage issued 2 separate invoices, one for 80,000 to ABC and another for 20,000 to Mr. Sharma. What is your answer? On 80,000 rupees, ITC can be availed by insurance company, and on 20,000 rupees, insurance company cannot take ITC. Even Sharma, because invoice is not in the name of insurance company, even Sharma cannot take ITC because the motor vehicle purchased by Sharma is not eligible for ITC because it is his personal car, correct or not? So he cannot take ITC because the motor vehicle purchased is not eligible for ITC. Got it? Second scenario. The garage issued single invoice for rupees 1 lakh to ABC Insurance, but ABC Insurance reimbursed only 80,000 to Mr. Sharma. What is your answer now? 80,000 only. Even though insurance company got an invoice for 1 lakh, but as they reimbursed only 80,000, proportionate to 80,000 only, they can take ITC. And 20,000 rupees, the question of ITC to Sharma is not applicable because the invoice is in the name of insurance company. Then number 3, scenario number 3. The garage issued an invoice for 1 lakh directly to Mr. Sharma, who later got reimbursed 80,000 rupees from ABC Insurance. Now in this scenario, so first, insurance company cannot take any ITC even though they reimburses 80,000 as invoice is not in the name of insurance company. However, Mr. Sharma cannot take ITC because it's a blocked credit. As a motor vehicle purchased is not eligible for ITC, insurance also not eligible for ITC. You got it? So that is the answer for the first question, second question and third question. Explain how the provisions of section 16(2) of CGST Act apply to these scenarios and the implication for claiming ITC. That is, about that 180 days point we need to write. Even if payment is not made by ABC Insurance Company to garage, they can avail ITC, and the proviso to section 16(2), what is that? Payment to supplier within 180 days condition is not applicable in this case. Understood? So that is about this circular, and possibility is there like that a question can be coined. Okay, next. But trust me pa, these questions on amendments and all, you can see after reading that questions you understood. Usually IC also makes questions like this. That is experience. And next, see the other part. Look into this. Up to third point we discussed. Up to third point we discussed in the previous page. Come back to previous page, page number 105. Up to third point we discussed. Look into fourth point. Hiring, renting or leasing of motor vehicles as a statutory obligation by employer to employee is also eligible for ITC. Statutory obligation can be under any law. Carefully listen. There is a BPO or a IT company which is working in night shifts, and as per Tamil Nadu government order, they need to mandatorily provide cab facility to their employees. So they took a cab on rent. Okay. Now first, if the cab purchased by the company, can they take ITC? No. Cab purchased by a company, they cannot take ITC because capacity does not exceed 13, not covered under exceptions, ITC not available. As the cab purchased by the company not eligible for ITC, renting of the cab is also not eligible for ITC. Got it? As the cab purchased is not eligible for ITC, if the cab purchase, renting is also not eligible for ITC. However, as it is under a statutory obligation by government, so they can take ITC. That is this fourth point. Got the clarity? So if there is under a statutory obligation, if they receive renting, hiring, renting of motor vehicles, they can take. Then ambulance and caravan are not motor vehicle for transportation of persons. Ambulance is not coming under motor vehicle for transporting persons, it comes under other motor vehicles and ITC available. Why, sir? Definitely, how much ever money you pay, they cannot transport you in ambulance, correct? Unless you have some serious health issue. Sir, class, sir, I have to go, sir. So, can you please take me? Our movie, 6 o'clock, I start at only 5:50. 10 minutes I need to go to theatre. Ambulance, come, and I will pay you 1,000 rupees also. Siren, drawing like that. Can you take? No, not allowed. Got it? So next, caravan. Caravan is also not a motor vehicle for transporting persons. Caravan is for, these actors who need to stay, take a temporary accommodation will not be there in every shooting spot. And that's why they take the caravans over there. And the shooting and all will happen somewhere in forest or desert, etc. At that time, they may not have hotel room to stay, etc. So in caravan itself, they will stay and they will change their dress. And all these cost, makeup, etc. and all will be done. For that they use, not for transportation. So again, that is not a motor vehicle for transporting persons. It will come under other motor vehicles, so ITC available. Then look into one more newly added circular in this regard. That is demo vehicles. Generally, if you see, lot of car dealers, they will be having demo cars. Lot of people, what they do, whether they buy or not, they just go and they will take the car and test drive they will be doing, and these people and all, take photographs, sit in the car and post that in Instagram. No one knows now that's a demo car or not. You understood? So we will also think, they are buying new cars every time like that. And these people, when they do test drive, whether these test drive cars are sold, like test drive cars are eligible for ITC. First, is it covered under further supply? Car is a motor vehicle for transportation of persons, capacity does not exceed 13. Number 1, is it covered under further supply? No. Number 2, is it used in the business of transportation of passengers? No. Is it used for imparting driving skills, that is driving schools? No. Then ITC should not be available. But the argument of the dealers is that, sir, if this demo car we are not having, then we can never sell the remaining cars. This test drive we need to give, then only we can sell the remaining cars. Even though it is not sold now, but it will be sold in future. The demo car will be sold in future, yes. In future they will sell the demo cars. Whenever the new model gets launched, the old model demo car they will sell. So therefore, how can you say that, you cannot get ITC, etc. with respect to that? For that reason, they are telling, yes, ITC will be given because it will indirectly promote further supply. It is not directly in further supply, but indirectly, because of this demo car only other cars are capable of being sold. So they are giving ITC on this demo car as per CBSE circular. Read the question. Whether ITC available on demo cars or demo vehicles used by a dealer for showcasing and test driving to potential customers. ITC is available on demo vehicles if they are used for promoting further supply of vehicles. If the demo vehicles are capitalized, then also generally these demo cars are capitalized or charged to P&L. Is it stock in trade or is it asset? Definitely asset. It's not a stock in trade. It's not being sold by them. So due to that reason, at the time of purchase, they will capitalize it. When they capitalize it, can they claim depreciation under 32? Yes, but they should be careful. What is that? When they are capitalizing, they should not take the depreciation on full value including ITC. If they take on full value including GST, then ITC not available. Yesterday we discussed that point, section 16 subsection 3. If you compute depreciation on full value including tax component, you will not get ITC. That point is only connected here. If the demo vehicles are capitalized, ITC is available unless depreciation is claimed on tax component. Unless depreciation under section 32 is claimed on tax component, definitely ITC is available. Okay. Then next one, on stock in trade, can we claim depreciation under 32? No. Remember that. On stock in trade and all, no one will claim depreciation under section 32. You got it? Depreciation under section 32 is only on the assets capitalized. Stock in trade, you will not claim depreciation. Is it clear? Then also on sale of such capitalized demo vehicles, GST is payable in terms of 18 subsection 6. What is this 18 subsection 6? That information is there in few pages afterwards. You can see that ITC in special cases, 18 subsection 6, page number 113. Page number 113. When capital goods are supplied on which ITC is availed, GST payable shall be highest of the following. So listen, when 18.6 will be coming, you are purchasing some capital goods. You are purchasing some capital goods. On purchase of capital goods, you have availed the ITC. What is capital goods? Those goods which are capitalized in the books of a person is known as capital goods. You are buying some capital goods. On that capital goods, GST paid is availed as ITC. Now that capital goods are sold. When the capital goods are sold, then 18 subsection 6 will be applicable. So tell me when 18 subsection 6 will come? You have purchased some capital goods. On purchase of that capital goods, you have availed the ITC. Thereafter, what you did with that capital goods, you have disposed it off. Okay. Now, how much will be the GST payable? See there, what is it they are telling? First you see, how much is the ITC availed? Minus 5% for every quarter or part thereof from the date of purchase till the date of disposal, you reduce it. You reduce it. Okay. Why? Simple. The life of the capital goods is considered as 5 years and you need to do the depreciation. 5% for 1 quarter means for 1 year it is how much? 20%. For 5 years it is how much? 100%. So like a depreciation you see. Then you will know what is the number of quarters for which you have used. Say 3 years you have used. 3 years you have used means how many quarters? 12 quarters. 12 quarters into 5%, that is 60% you can enjoy. What is the remaining life? 2 years. For 2 years, what is the ITC? 40% you should not enjoy, that you should pay. Is it clear or not? Or compare it with what? Second one, that is GST payable on that capital goods. When you are selling that capital goods, you need to pay some GST now. Some sale value will be there for that capital goods. On that GST, whichever is higher, not whichever is lower, whichever is higher will be the GST payable. Is it clear? Come on, repeat the provision. A, ITC avail minus 5% for every quarter or part thereof from the date of purchase. Quarter or part thereof. Quarter or part thereof means what? So even if you are using it for 1 day in that quarter, you need to take it as full quarter. And so quarter is considered as what here? Calendar quarter. Calendar quarter means Jan to March is 1 quarter, April to June is 1 quarter, July to September is 1 quarter, then October to December is 1 quarter, like that. Okay. So in that calendar quarter, any 1 day if it falls also, you count it as full quarter. That is this. For every quarter or part thereof. From which date to which date? From the date of invoice or purchase till the date of sale. Okay. Or GST payable on sale value of that capital goods, whichever is higher, that is the GST payable under 18 subsection 6. However, there is one special point for 18.6. This section not applicable in case of refractory bricks, molds and dies, jigs and fixtures supplied as scrap. Underline that. Supplied as scrap. So what are refractory bricks? Refractory bricks are something which are used for the purpose of, construction of, clints, commercial clints. Okay. So you can see here, refractory bricks. Usually they use these refractory bricks for the purpose of construction of a clint and they will heat the raw material. They will heat the raw material, that is this refractory bricks. And then next one we have jigs and fixtures. So jigs and fixtures means like this: to hold the material, or equipment, etc. and all, we use jigs and fixtures. Okay. And then we have molds and dies. So molds and dies means to bring the product into a requisite shape. For example, I want a product, okay, so into requisite shape. Mainly during this Ganesha festival, we make the modaks, and for that we use a mold. That is an example of a mold or a die. Got it? So these molds and dies, but all these are sold as what? Scrap. All these are sold as scrap. Then in that case, GST payable or GST not payable? Payable, but normally means what? Sale value. Don't compare ITC avail minus 5%, etc. and all. Just take the sale value into GST rate. Is it clear? What are the three goods, pa? Refractory bricks, molds and dies, jigs and fixtures, sold as scrap. GST on normal sale value. Now look into one illustration related to this in the next to next page, page number 115. Page number 115. See that illustration. Capital goods purchased on 8/10/2019 for rupees 10 lakhs, excluding GST at 12%. They were disposed of on 5/5/2021 for rupees 6 lakhs, excluding GST at 12%. Compute the GST payable. How much will be the GST payable? First, ITC avail minus 5% for every quarter or part thereof. From when to when? From the date of purchase till the date of sale. What is the date of purchase? 8/10/2019. 8/10/2019 means, so it is coming in which quarter? October, November, December. That is one quarter, 2019. Again, 2020, how many quarters? 4 quarters, so total 5. Then in 2021, Jan, Feb, March, April, May, June, so 2. So total 7 quarters. Are you understanding this? So date of purchase to date of sale, we are trying to understand how many quarters. So even one day in that quarter, you count it as full quarter. So October means October, November, December, so 1 quarter. Again in 2020, 4 quarters, so total 5. 2021, Jan, Feb, March, then April, May, June. So May is also there. So due to that reason, April, May, June. So total 7 quarters. 7 into 5, how much? 35%. What is the ITC avail? What is the formula? Can you tell me what is the provision? How much is the GST payable? ITC avail minus 5% for every quarter or part thereof. What is the ITC avail? Check the question. What is the ITC avail? 10 lakhs into 12%. That is 1,20,000 minus 7 quarters into 5%, that is 35%. See this. 7 quarters into 5%, 35, how much? 1,20,000 minus 35, 78,000. Or GST on sale value. What is the sale value? 6 lakhs into 12%, that is 72,000. Whichever is higher. Which is higher? 78,000. Are you understanding this? Next part. What will be your answer if such goods are not capital goods? If such goods are not capital goods, this section 18(6) will not come. Normally we will pay GST on the sale value. What is the sale value? 6 lakhs. What is the GST rate? 12%. So on that we will pay, that is 72,000 will be the GST payable. Understood? Now next one. What will be your answer if such capital goods are disposed of without consideration? Without consideration means there is no consideration, but it will become supply. Why it will become supply? Disposal of business asset on which ITC is availed. Then the value will be determined as per rules, and that value usually given in the question itself. Open market value like that, or fair market value, it will be given in the question. And the market value is 4 lakhs. So what we need to do? Same. Whether 18(6) is applicable? Yes. because it's capital goods only on ITC avail. A, that is ITC avail minus 5% for every quarter or part thereof, 78,000, no change. B, GST on sale value, there is no sale value, so we need to determine its market value, that is 4 lakhs into 12%, that is 48, whichever is higher will be 78,000. Understood? Next, third part, what will be your answer if such capital goods are disposed of without consideration and the open market value or fair market value cannot be determined, value cannot be determined as per rules? Then in that case, A only will be there, B will not be there, only A will be there. What is A? 78,000 and B will be 0. So 18,600 GST payable will be A, that is 78,000, B will not be there. What will be your answer if such capital goods are sold after 5 years? Then what will happen? A will become 0. How A will become 0? 5 years pa. 5 years means fully depreciated na. 5% for 1 quarter. 1 year means 20. 20 into 5, 100%. So fully depreciated. So A will become 0. And B will be GST on sale value, that is 6 lakhs into 12%, 72,000, whichever is higher will be 72,000. Can you add one more point there? Please write down point number 5. What will be your answer if they are, what will be your answer if they are refractory bricks? Refractory bricks, which are sold after 4 years, as scrap for a value of rupees 1 lakh, for a value of rupees 1 lakh. Whether we will do A or B, whichever is higher? No, we will not do all those things. We will just take sale value. Even if after 4 years or after 2 years, irrelevant. This 4 years point and all is irrelevant. Is it clear? We will take just B only. What is that B? That is 1 lakh. 1 lakh into 12%, that will be equals to 12,000 is the GST payable. GST payable. A will not come, only B will come. Okay. Understood here 18 subsection 6. Why we discussed 18 subsection 6? Demo car, listen, demo car purchased and after some years it is sold. At that time, how to determine the GST payable as per 18.6? Because demo car purchase is capitalized. When demo car purchase is capitalized, when it is sold, definitely capital goods on which ITC avail is sold. So 18 subsection 6 we need to do the computation. For that reason we learned this 18 subsection 6. So please go back to that demo car circular. Demo car circular, you see. Come back to page 105. Third point we were discussing, also sale of such capitalized demo vehicles, GST payable in terms of 18.6. If demo car is used for non-business purpose, some dealers are there. What they will do, demo car, they will use it for their personal purpose. They will not give it to customer for test drive. They will use it for their personal purpose. Okay. They are as a part of marketing services for the manufacturer. Means they will not give it for test drive, they will keep it only in airports or somewhere in a like exhibition, etc. They will just display it. On that and all ITC cannot be taken, only on used for test drive, on that only we can take ITC. Is it clear? So non-business purpose or as a part of marketing service. If you see Chennai airport, there is one car. So I think Toyota Tizer like that, urban cruiser Tizer like that, one car they have kept it at the out gate. If you see, there is a car, one car for last 2 months they have kept there, okay. And what is that? That is for display. Also in some exhibitions, shopping malls, etc. VR mall also, if you go, so in the ground floor itself they have kept. And sometimes this Express Avenue mall, big shopping complex also, they will keep that car. That is just for display. That will not come under test drive. Sir, give me, like that Beast movie, I will go and come in the mall like that. No, not allowed. You understood or not? That is not for a test drive. And then ITC not available. If the demo car are used for non-business purpose as a part of marketing service for the manufacturer, ITC is blocked. Related to this demo cars, I have given one question. Please take the workbook and see question number 14, page number 57. Question number 14, page number 57. ABC Motors, an authorized dealer for motor vehicles, purchases 5 demo vehicles from XYZ Auto Limited, a manufacturer, on October 1, 2024. These demo vehicles are used for test drives and to showcase features to potential buyers. Each vehicle has a value of 10 lakhs excluding taxes, and ABC Motors receives a tax invoice for the purchase, which includes the following: IGST on demo vehicles 18%, that is 1,80,000 per vehicle. Total purchase cost per vehicle 10 lakhs plus 1,80,000, 11,80,000 per vehicle. ABC Motors plans to capitalize these vehicles in its books of accounts at rupees 10 lakh per vehicle and intends to use them for test drives for a period of 2 years before selling them as used vehicles at a written down value. After 2 years of usage, ABC Motors sells one of the demo vehicle for rupees 5 lakh and IGST on the sale is applicable at 18%. Determine whether ABC Motors can claim input tax credit on the purchase of these demo vehicles. If yes, compute the ITC avail. What is the value of the demo vehicle purchase? 10 lakhs. What is the GST paid on that? 1,80,000. How many demo vehicles they purchased? 5. So as per CBSE circular, can they take ITC on the demo vehicle purchased? Yes. 1,80,000 into 5 will be 9 lakhs. So they can take an ITC of 9 lakhs. Then second, what will be your answer if the motor vehicles are capitalized in its books at 11,80,000 per vehicle? ITC not available because the capitalized value is including GST component as per section 16(3). If the depreciation is computed on full value including GST, then ITC not available. Calculate the GST payable at the time of sale of demo vehicles. How to determine the GST payable? As per 18(6), correct? 18(6). Just now we discussed 18(6). What is that 18(6)? A. ITC avail. See the ITC avail. How much is the ITC avail? 1,80,000. One car is only sold. 1,80,000 minus 5% for every quarter or part thereof. From when to when? From the date of purchase till the date of sale. Check the question and tell me what is the date of purchase. 1st October 2024. And what is the date of sale? After 2 years. Means exactly, so 8 quarters. 8 quarters into 5%, 40%. So 1,80,000 minus 40%. How much 1,80,000 minus 40%? 1,08,000. Or B, sale value. What is the sale value of the demo car? 5 lakhs into what is the rate of GST? 18%. 5 lakhs into 18%, 90,000. Whichever is higher. Which is higher? So 1,08,000 is the GST payable on the sale of such demo car. Understood? Like this, circular, they can connect with 18(6) and make a question like this. Okay? Then come back. So we completed all motor vehicle related points. Now we are moving on to construction related block credits. Page number 106. Page number 106. First, any services, works contract service or goods. These are the 3 inward supplies. Any service like construction service, interior decorator service, architect services, any service. Works contract. Works contract means what? They will only purchase a material, they will only do the labor, and they will do complete work. That is works contract. Next, number 3, goods purchased. Goods purchased means cement purchased, bricks purchased, etc. and all. All these 3 purchased or received in relation to construction of an immovable property. What are the 3 inward supplies? Any service, works contract service, or goods. Purchased or received in relation to construction of immovable property, ITC not available on these inward supplies. Got it? These are the 3 blocked credits. And works contract means what? Both property, transfer of property in goods, as well as provision of service for a single consideration. However, for these 3 blocked credits, we have 3 exceptions. Exception number 1, the above discussion is not applicable to a supplier. That is, only owner of the property, this restriction is applicable. If the supplier, that is builder, is purchasing works contract, receiving works contract service, or purchasing goods for construction, definitely he can take ITC. See that. The above discussion is not applicable to supplier. That is, if a works contractor receives construction service for construction of an immovable property, then ITC can be availed on construction service. Second exception, for construction of a plant and machinery, even though immovable. So plant and machinery means lifts, escalators, or any machineries, etc. For that, even though immovable in nature, so if we buy this, we can take ITC. If we receive this, we can take ITC. However, plant and machinery excludes telecommunication towers and pipelines laid outside factory. So if they, for construction of telecommunication towers also, we need to make a cement base. So if you see telecommunication tower, first there will be a cement block. On the top of that cement block only they will fix the telecom tower. So to make the cement block, they will buy the cement, etc. and all. Can they take ITC on that? No, because telecommunication towers is excluded from plant and machinery. Same way, for laying down pipelines outside the factory gate, for waste disposal, they will lay down the pipelines. Again, that is also not counted as plant and machinery, so ITC not given. Then, if construction expenditure is charged to P&L, so then also ITC can be availed on the above inward supply. So what is that? Suppose if the construction expenditure is charged to P&L, means if it is capitalized, ITC not available. So when we will charge it to P&L, if it is a renovation expenditure, a repair expenditure, etc. and all, the construction expenditure is charged to P&L, so ITC available in that case. What are the 3 exceptions? Number 1, the restriction is not applicable to supplier. The restriction is only to the owner of the property. Then number 2, if it is a plant and machinery other than telecommunication towers and pipeline laid outside factory gate. Number 3, if the construction expenditure is charged to P&L, then also ITC available. Now, generally supplier can take ITC, that is a builder can take ITC, correct? But there is one more condition. If the builder's outward supply is 1.5% or 7.5%, then they cannot take ITC on their inward supply. This is first exception related point. First exception says, if the promoter or builder or a contractor is purchasing the goods, they can take ITC, receiving the service, they can take ITC, because it is not for their construction, for their client they are purchasing it, they can take ITC. However, what should be the applicable rate of GST? 7.5 or 1.5 means they cannot take ITC. The rate of GST should be 12% or 18%. For residential projects, the rate is 1.5, 7.5. That's why they cannot take ITC. ITC not available, even though such inward supplies are not blocked ITC. But for commercial constructions and all, 12%, 18% is the rate, so they can take ITC on inward supplies. Then, related to this, there is one circular you can see. This is a newly added one. Whether ITC available on ducts and manholes used in network of optical fiber cables. So on ducts and manholes, can we take ITC? What is this ducts and manholes? You would have seen, you know, in this telecom companies and all, telecom, internet companies and all, what they do, they will dig a manhole and they will put the duct pipe. Through the duct pipe, they will be sending the optical fiber for data transmission. Okay, like your broadband, internet and all, if you see the cable will come now, so that they will be using a optical fiber below the earth. Okay, for that they will make a manhole, and in the manhole they will make the pipes, and they will be using the optical fiber. Now for construction of this requires a construction na. So first they need to make a manhole and they need to do construction, etc. For this construction, can they take ITC? For this construction, can they take ITC? So first, is it immovable property? Yes, it's a immovable property. Will it come under plant and machinery? Yes, it will come under plant and machinery. This is coming under plant and machinery. Can they take ITC with respect to that? Generally, plant and machinery is an exception, so we can take ITC. But sir, telecommunication towers, like that one point is there na? That is only for telecommunication towers. This is not a telecommunication tower. So due to that reason, they can take ITC. That's what circular says. Also, one more exception is there, like plant and machinery excludes telecommunication towers and pipeline laid outside factory. Won't it come under pipeline laid outside factory? No, that is only for manufacturer who is laying down the pipeline outside factory. So, but these people can treat it as plant and machinery and happily they can take ITC. That is what CBIC circular says. Read that. Ducts and manholes which are integral part of optical fiber cables qualify as plant and machinery, and can avail ITC on the same, even though used by telecom companies as only telecommunication towers are excluded from the meaning of plant and machinery. Even they do not fall under pipelines laid outside the factory gate. Got it? Next one, say this. Only hiring, renting and leasing of motor vehicles is not block credit. However, leasing of any other items is not blocked ITC. So, construction of a building is blocked ITC. Construction is blocked ITC. Correct? Instead of constructing a building, I take the building on rent. For the rent, I pay GST. Can I take ITC on that? Yes. There is no restriction. Rather than constructing a building, I take the building on rent. For that rent, I pay GST. Definitely, I can take ITC. And works contract service confined only to immovable property. ITC available on construction of pipelines inside factory, because only pipelines outside factory is excluded from plant and machinery, but pipelines inside factory is plant and machinery. ITC available on rails, 2 or 3 wheelers with capacity up to 25 cc. So, rail is not a motor vehicle. So, rail purchased. Who will buy rail? Who will buy rail? Government will buy rail, even others also will buy. Like some companies, manufacturing companies, what they do, up to the railway station, they will put their track and they will buy the wagons, and in that wagons they load the goods and they will be sending it to the railway stations. Is it clear? And Chennai Metro Rail Network, Rail Limited, CMRL, is not a government, it's a PSU, and they buy the train for using it in metro. Got it? So that is not a block credit. But metro is outward supply exempted. Correct? Transportation of passenger by metro, mono and tramway is exempted. So they cannot take ITC on inward supply, otherwise they can take. 2 or 3 wheels with capacity up to 25 cc is not a motor vehicle. Up to 25 cc. Sir, minimum itself, if you see scooty or this XL like that and all, 75 cc, 100 cc, sir. 25 cc means we don't have any vehicle like that. Maybe one bicycle with one motor fixed. That is called as up to 25 cc. That is not a motor vehicle. Definitely will not call it as motor vehicle. Correct? We can run and go also. And this, in VIP movie, Dhanush will be using. No, that is what 25 cc will be. And can we take ITC on that? Yes, we can definitely take ITC on that. ITC available on 2 or 3 wheels with capacity up to 25 cc. And before moving on to other block credit related to this optical fiber network, there is one question I have given. Please see question number 17, page 59. Question number 17, page 59. XYZ Telecom Limited is engaged in providing telecommunication service and is expanding its network by laying new optical fiber cables across various regions. The OFCs are housed with thin PVC ducts and service or connectivity manholes are installed as nodes in the network to facilitate maintenance and connectivity. The company has incurred significant expenses on purchasing these ducts and manholes. You are required to, point number 1, determine whether XYZ Telecom Limited can claim ITC on the purchase of ducts and manholes used in OFC network. As they are incurring significant expense, these are capitalized and these are capital goods. At the same time, this will come under plant and machinery. Therefore, ITC can be availed as per CBIC circular. Second, explain the rationale behind the eligibility of ITC on these items, referring to the relevant sections of CGST Act. The rationale is simple. Generally, when something is not in blocked ITC and used in the course or furtherance of business, we can take ITC. That is the rationale. So, generally, when something is not in blocked ITC but used in the course or furtherance of business, is it used in the course or furtherance of business? Yes. It's not in blocked ITC, so ITC can be availed. Discuss whether there are any specific restrictions under 17.5 that would prevent XYZ Telecom Limited from claiming ITC on these purchases. Yes, only one. What is that? Telecom towers. If they are incurring this expenditure for telecom towers, then they cannot take ITC because telecom towers is excluded from plant and machinery. Then 4, analyze the impact on XYZ Limited GST liability if these components were instead classified as excluded items under definition of plant and machinery, then ITC not available. If the same is not covered under plant and machinery, then ITC is not available. Got it? Then come back. We are now discussing other blocked credits. These are some miscellaneous blocked credits here. Say this, we have some inward supply. That inward supply is membership of a club, health and fitness center. It's a block credit. Example, lot of celebrities take gym membership and fitness center memberships. Can they take ITC on the membership fees paid? Gym membership with GST, they have to. Can they take ITC on that? No. Even though it is a business expenditure, they cannot. Lot of chartered accountants will take membership of social clubs like Lions Club, Rotary Club, etc. and all. Social club membership they take because to increase their clients. And this is a purely business expenditure, but even the ITC not available because membership of a club, health and fitness center. However, we have an exception. If it is provided by employer to employee under a statutory obligation, ITC is available. Example, Neyveli Lignite Corporation is required to take membership of a social club for the purpose of their employees who are working in the coal mines. Employees who are working in the coal mines, workers who are working in the coal mines, they need to take membership of a social club for recreation purpose. As it is under a statutory obligation they are taking, that membership fees, whatever they paid GST, they can take as ITC because it is under a statutory obligation by employer to employee. Got it? Then look into the second one. Travel benefits to employees on vacation, that is leave travel concession. Travel benefits extended to employees on vacation, ITC is not available. For example, there is an employee who is going on a vacation and that expenditure, for example, honeymoon expenditure of the employee is borne by the employer. Of course, employee is going with employee's wife only and employer borne the expenditure. Can the employer take ITC with respect to that? No, because it is travel benefit to employee on vacation. What if the employee is going on a business visit and the travel expenditure is borne by employer? Can the employer take ITC with respect to that? Yes. What if he is not at all an employee? What if he is not at all an employee? Means he is a director, not an employee, director or statutory auditor or customer, etc. and all. Then in that case, can they take ITC? Yes, they can definitely take ITC because only for employee this restriction is given. One more exception, one exception is there. See that exception, what is that? If it is incurred by employer to employee under a statutory obligation, then they can take ITC. Example, Karnataka government mandates the employer to mandatorily provide leave along with that travel expenditure also to employees if they are having employees from northeastern states. From northeastern states like Assam, Manipur and all, if they are having employees, they need to mandatorily provide paid leave and travel expenditure they need to bear. Because of that, they incur the travel expenditure, means it's a statutory obligation, so ITC is available. Then NRTP, non-resident taxable person. Who is a non-resident taxable person? Who is coming from outside India to India and is not having any fixed place of business in India and is engaged in supply of goods or services in India, is known as NRTP. Example, cricketers who come from outside India to India, who play for IPL matches here, will come under NRTP. Do they have any fixed place of business in India? No. And they will be importing goods. What goods they will be importing? Their cricket kit. Their cricket kit and all is not allowed as normal baggage. It should come as a cargo only. And so all that, because people will have emotion towards their bat, pads, helmets, etc. and all, they will use that only. And for that purpose, the cricket kit and all will be imported. And on import by these NRTP, can the GST paid be taken as ITC? Yes. Exception is only import of goods. Generally, if they receive any inward supplies in India, suppose if they stay in a hotel in India, they receive inward supply, can the GST paid be taken as ITC? No. But only on import of goods, whatever GST they pay, they can take as ITC. One more example. So this Ambani son's wedding happened. For the sake of that, Mukesh Ambani has called big celebrities from outside India to come and sing. In that, Shakira, like that one pop singer, she came. And when she came, along with her, she brought 4 or 5 containers of her garments, costumes, cosmetics, band equipment, everything. Everything of her she only brought from there to here. And on that import of goods, can she take ITC? Yes. Will she come under NRTP? Yes. She is an NRTP because outside India to India, non-resident, and they don't have any fixed place of business in India. Only import of goods they can take ITC. Clear? Next one. Next one you see. Food and beverages, outdoor catering. Remember food. Food. Then beauty treatment, cosmetic surgery, plastic surgery, beauty. If you eat too much food, beauty gets spoiled, then insurance is required. Got it? Only 3. Food, beauty, insurance. Food, beauty, insurance. In food, what is covered? Food and beverages, outdoor catering. Beauty treatment, cosmetic surgery, plastic surgery, hair transplantation. Insurance, life insurance and health insurance. These are blocked credits. However, we have 3 exceptions. Exception number 1, inward supply, outward supply in the same category. That is, I am into the business of sale of food and beverages. I buy the food and beverages. I can take ITC. Number 2, inward supply is part or component of composite or mixed outward supply. For example, I am into the business of transportation of passengers by airways. I need to provide food to my passengers. For providing food to my passengers, I will purchase the food and beverages. Can I take ITC? Yes. Because inward supply is part of outward supply, composite or mixed outward supply. Suppose if I spend money on beauty treatment of air hostess, can I take ITC? I am into the business of transportation of passengers and I have air hostess. On air hostess beauty treatment expenditure I have incurred. Can I take ITC with respect to that? No, because air hostess is not in the outward supply. So people are not paying for air hostess. So composite or mixed outward supply, it should be part. Then only I can take ITC. Are you understanding this? Next, suppose if these expenditures are incurred by employer to employee under a statutory obligation, then also ITC available. What is that? There is a factory which has to mandatorily provide food to their workers. For that reason, they have received outdoor catering service. Can they take ITC? Yes, because it is under a statutory obligation. Then see the balance. Suppose if I am buying from a person opting for composition scheme, can I take ITC? No, because first of all, a person under composition scheme should not charge me GST. Even if they charge me GST, I cannot take ITC. Suppose if I am purchasing any goods used for personal consumption, I cannot take ITC. And also if I am purchasing any goods for the purpose of CSR obligation, corporate social responsibility obligation, then also ITC not available. Then goods lost, stolen, destroyed, written off or disposed of by way of gifts or free samples, then also ITC not available. What is this? I am purchasing some goods and keeping it in the warehouse. Floods came. Because of the heavy floods, completely the stock is gone. Now can I take ITC on the stock purchase? No, because it is lost, stolen, destroyed or written off. Sir, but it is natural calamity now. Let it be normal reason or abnormal reason. If the goods are lost, say fire accident has taken place and the raw material is destroyed, I cannot take ITC on that. If I have taken ITC, I need to reverse. Same way I am purchasing some goods for distribution as gifts or free samples. Can I take ITC with respect to that? No, I cannot take ITC with respect to that. For example, so what we are doing is that every year for Diwali, we are giving a gold coin to our employees, okay, and really, I mean it, okay, that's a real example. And for that purpose, I will buy the gold coin from various JRT or Joy Lucas like that. GST is paid, 3% GST on gold coin. Can I take that 3% GST as ITC? Why I cannot take ITC? Because what I am doing with the gold coin, am I selling? Am I a jewelry business? So what I am doing? I am giving it to my employees as gifts or free samples, correct or not? So therefore I cannot take ITC with respect to that. Is it clear here? Next. So the value of gold coin per 1 gram gold coin will be what, somewhere like 7,500 rupees or 8,000 rupees. It does not exceed 50,000 rupees per annum per employee, so not a supply. Suppose if I buy a like one iPhone for all my employees and give it to my employees, okay, so no recording, then so for example only, and in that case whether I can take ITC on the mobile purchased? Yes. Why I can take ITC on the mobile purchase? iPhone value definitely more than 50,000. When I am giving it to my employee as gift, it will become supply. So on purchase of that, I can take ITC. So generally, when the purchased goods are given as gifts or free samples, ITC not available. But if that gifts or free samples constitutes supply, then ITC available. See that below. See that below. If gifts or free samples treated as supply under 7(1)(c), then ITC not required to be reversed on inward supply. Then next, ITC not required to be reversed. Just remember that mobile example, okay. If you want, you write down in brackets, iPhone purchased and given as gift to employees. iPhone purchased and given as gift to employees, comma, ITC available. iPhone purchased and given as gift to employees, comma, ITC available. You understood the reason why? Why? Because the value exceeds 50,000 per employee, correct? Next, this point is not applicable, so leave it. GST paid under 74, 129 or 130 or any other recovery proceedings, such GST paid cannot be availed as ITC. So that point you leave it. I'll just give you what is it about, not important for intermediate and all. That is, whenever I'm not paying GST voluntarily, I'm your supplier, I'm not voluntarily paying GST, but government has recovered it from me. When the government has recovered it from me, I have not paid voluntarily, means first of all I will not report it in GSTR1, correct? When I am not reporting it in GSTR1, naturally it will not come in 2B, so you cannot take ITC, so that's meaningless, no need to read that point. Then look into one circular in this regard, whether ITC available on goods purchased for free replacement during warranty period. I am purchasing some goods and that goods I am giving as free replacement during warranty period. I'll give you two examples, carefully listen. Example number 1, I am a car dealer, you purchased a car from me and in that car, say, parking sensor is not working and it is covered under warranty, 2 years standard warranty. You purchased after 3 months, the parking sensor is not working. So you brought the car and asked me to do the replacement of the parking sensor. So I need to replace that part. To replace the part, I will buy the part. From where? From the market. From the market, I will buy the part. Can I take ITC on the part purchased, which is given as replacement freely? I did not charge you anything. I am doing replacement freely. Can I take ITC? Yes, I can take ITC. Because it's nowhere in the block credit and it is used in the course or furtherance of business, I can take ITC. Okay. But this part on which I have taken ITC, I gave it to you freely. Won't it come under disposal of business asset on which ITC availed? No, don't invoke 7(1)(c). The circular says don't invoke 7(1)(c). It will not come under disposal of business asset on which ITC availed. Are you understanding this here? I purchased a part first. On the part purchase, I am taking ITC. When that part is replaced during warranty period, will this come under disposal of business asset on which ITC availed? No. So consequently, it is not a supply. Read that. And one more example, let me complete that also. Second example, I am a electrical shop. You came to my shop and asked for a rechargeable torch. And I showed you various models and you selected one model and it was working fine. You took it to your home and did the charge. Next day it is not working. Again you are bringing that rechargeable torch and I need to replace it with a new one. So for replacing it with a new one, I will buy the new one. Correct. Can I take ITC on the new one purchased? Yes. Should I pay any GST on this? No, because already on the previous one I paid GST. Is it clear? So no need to pay GST on this. Say this, when a part, that car sensor example, when a part or entire product, that rechargeable torch example is replaced during warranty, ITC can be availed, correct? On goods purchased for warranty, irrespective of whether any consideration is charged or not with respect to such warranty repairs. Can I take ITC here? Yes, I can take ITC. Where distributor uses his stock for replacement, manufacturer replenishes the stock on which manufacturer can take ITC. Now concentrate. I am a car dealer. I will have some stock. Out of that stock, I took one part sensor and I replaced it. Now that sensor which I took from my inventory and replaced, the manufacturer should refill that inventory because warranty repair, who should bear? Manufacturer should bear, dealer will not bear. Are you getting this? Manufacturer will bear. So I took it from my stock and I replaced. Now that stock should be refilled by the manufacturer. So for that, manufacturer will buy the part. Can manufacturer take ITC? Yes. So where the distributor uses his stock for replacement, manufacturer replenishes. Replenishes means what? Replenishment of stock means what? Refilling. Replenishment of the stock on which manufacturer can avail ITC. Manufacturer can take ITC. Amount paid for extended warranty. Amount paid for extended warranty. What is this amount paid for extended warranty means? So sometimes, when you buy a mobile, they will say there is a standard warranty of 1 year, and if you want extended warranty for additional 2 years, 3 years, they will say extra you need to pay some money. Almost all electronics we have this. And this extra charges whatever you pay is coming under composite supply. Please concentrate. Is coming under composite supply if you pay these charges at the time of purchase of the product itself from the same person. Amount paid for extended warranty taxable at the same rate applicable to goods if the warranty is taken from the same supplier at the time of purchase of goods. Same supplier, same time. Same supplier, same time. Then what is the rate applicable to this warranty? The rate applicable to the product. If the product is 18%, warranty also 18%. If the product is 12%, warranty also 12%. If the product is 28%, warranty also 28%. Is it clear? So, if the amount for extended warranty is paid to another supplier, it is treated as a separate supply. So, always taxable at 18%. Whenever you are buying TV, this is a advice. Whenever you are buying a TV, don't pay for the extended warranty at the time of purchase of TV. You know why? TV is taxable at 28%. If you pay for the warranty at that time, on warranty also they will charge 28%. You pay separately. When you pay separately on that warranty, the rate of GST will be 18%. but when you buy an AC which is 12%, so in that case, for warranty you take at the time of purchase of AC itself, otherwise warranty will be taxable at 18%. You understood? That is this. If the amount paid for extended warranty after purchase of goods, then it is treated as different supply, whether purchased from same supplier or different supplier. You can easily remember, one point only remember. Same supplier, same time, principal supply, the product rate will be taken. Any other case means what? Same time, different supplier, or different time, same supplier, or different time, different supplier. Is it clear? All other three cases, it is not a composite supply. We will take the rate applicable to warranty only. Is it clear? Now, this is latest amendment that they have added for May 25 exam. On this, we have one question. So, please see that. Question number 15, page 58. Open the workbook. Question number 15, page 58. Samsung Electronics sells a smartphone to a customer with a 1-year manufacturer warranty. During the warranty period, the customer experiences a defect and visits an authorized distributor who replaces the defective smartphone with a new one from their own stock. Samsung later replenishes the distributor stock without charging any additional amount. Additionally, at the time of purchase, the customer buys an extended 2-year warranty from a third-party service provider, Warranty Plus, which begins after the manufacturer's 1-year warranty expires. You are required to determine the GST liability for Samsung on the replacement of defective smartphone under the manufacturer's warranty. So, what is your answer? So, first Samsung dealer is replacing, Samsung dealer is replacing the smartphone. Now, out of his stock. Now, what is the treatment in this case? Whether he need to reverse any ITC? No, he don't have to reverse any ITC. He can enjoy the ITC. Read the answer for the first question. As per CBSE circular, when a dealer replaces a part or whole goods, GST not payable even though it is without consideration, as GST is already paid for defective parts or goods. Also, dealer not required to reverse any ITC. Second question. Explain the GST implication for Samsung when it replenishes the distributor stock with a new smartphone. So, manufacturer is replenishing the stock to the dealer. At that time, whether manufacturer is required to pay any GST? No, it is not a supply. He will just send it to the dealer, and under a delivery challan, it is not a supply. And can the manufacturer take ITC? Yes. Read the answer to the second part. As per CBSE circular, when manufacturer replenishes defective goods, that is smartphone, to the dealer, GST not payable by manufacturer. Also, such manufacturer not required to reverse any ITC. Third question. Discuss the treatment for the extended warranty provided by Warranty Plus. Warranty Plus is same person or another person? Who is selling mobile? Dealer, Samsung dealer. But who is giving warranty? Another person, Warranty Plus. So, definitely that's an independent supply, correct? Considering it was purchased at the time of original sale, even though it is purchased at the time of original sale but from a different supplier. So, it is treated as a independent supply. See there. If extended warranty charges is paid to different supplier at the time of purchase of product or at a later time, it is treated as a separate supply and chargeable to GST at the applicable rate to warranty services. Then 4. Analyze how the GST liability would change if the extended warranty was purchased from Samsung directly at the time of original purchase. Then what is it? It is treated as what? Composite supply, and GST will be payable at the rate applicable to principal supply. Is it clear? So, that is the answer for this question. Okay. See the answers for the question number 1. Mr. X, chartered accountant, purchased car for use in his business. Can he take ITC with respect to car purchased? No, he cannot take ITC with respect to car purchase. And what is the justification for this? Capacity less than or equals to 13 and not covered in exceptions. Not covered in exceptions. Capacity does not exceed 13 and not covered in exceptions. Cool Cap Private Limited purchased 4 cars for use in the business of transportation of passengers. Whether ITC available with respect to this? Yes. Why? Because capacity, even though less than or equals to 13 and used in business of transportation of passengers. Business of transportation of passengers. That's right. Next, MRF Limited purchased a bus 40-seater. 40-seater excluding driver for transportation of its employees. Whether ITC available? Yes. Why ITC available? Because the capacity exceeds 13. Tagore School purchased a school bus 12-seater excluding driver for transportation of students. What is your answer? No. Why? Outward supply is exempted. Very good. Transportation of students is exempted. Transportation of students is exempted. When our outward supply is exempted, we cannot take ITC on inward supply. That's why. Pizza Hut purchased 10 two-wheelers for food delivery. Can they take ITC? Yes. Yes. Why, sir? It will come under other motor vehicles. It will come under other motor vehicles, not motor vehicle for transporting persons. They are not transporting persons, they are doing food delivery. That's why it will come under other motor vehicles, ITC available. Ford Limited received the service of authorized service station with respect to trucks owned by it. Can they take ITC? Yes, because truck purchased is eligible for ITC. So repair service also eligible for ITC. So reason, as truck purchased is eligible for ITC. As truck purchased is eligible for ITC. So due to that reason, repair service also eligible for ITC. Car purchased by a manufacturing company for official use of its employees. Can they take ITC on this car purchased? No. Why? Because car is capacity less than or equals to 13 and not covered in exceptions. Not covered in exceptions. Then car purchased by a dealer for sale to customers. Can they take ITC? Yes. Why? Further supply. Even though capacity less than or equals to 13 and covered under further supply. Covered under further supply. Due to that reason, ITC available. Then 9. Cars purchased by a company engaged in renting out cars for transportation of passengers. Can they take ITC? Yes. Same as above. Same as above. Further supply. Further supply includes not only sale but also renting. Cars purchased by a car driving school. ITC available? Yes. Reason, capacity does not exceed 13 and used by driving schools. Used by driving schools. Next, trucks purchased by a company for transportation of its finished goods. Can they take ITC with respect to the trucks purchased? Yes. Okay. Reason, other motor vehicles. As it is other motor vehicles, so ITC is available. Aircraft purchased by RIL for transportation of its directors. No, because aircraft is block credit, aircraft and not covered in exceptions. Not covered in exceptions. That's why ITC not available. Then next 13. Rent-a-cab service received by a company in BPO operations for transportation of its employees where it is mandated by government order. Whether ITC available? Yes. Generally rent-a-cab is blocked credit, but it is covered under the exception. What is that exception? Statutory obligation. Statutory obligation by employer to employee. That's why ITC available. Mr. Rohit is engaged in providing beauty treatment services on a particular day with a view to cater the demand of large number of customers. He availed the beauty treatment services from Mr. Wazir. Accordingly, Mr. Wazir raised an invoice on Mr. Rohit for stipulated consideration along with applicable GST. Whether ITC available? Yes. Generally, beauty treatment is blocked credit, but if inward supply, outward supply in the same category, then ITC available. Okay. Inward supply, because they are beauty parlor service, they are also receiving beauty parlor service from another beauty parlor. So inward supply and outward supply, inward supply and outward supply in same category. Inward supply and outward supply in same category. Then next, 15. ABC Limited is engaged in supply of transportation of passengers by air services with a view to provide its passengers the facility of food and beverages. It avails outdoor catering services from Hotel Taj, New Delhi. Resultantly, Hotel Taj raises an invoice on ABC Limited for supply of outdoor catering services for a stipulated consideration along with applicable GST. Can they take ITC with respect to this outdoor catering services? Yes. Why? Because inward supply is part of composite or mixed outward supply. Okay. Inward supply is part of composite or mixed outward supply. Composite or mixed outward supply. Due to that reason, ITC is available. Next, outdoor catering service received by a factory where it is mandatory under Factories Act to provide food facility to workers. Yes, generally food and beverages outdoor catering is block credit, but why ITC available in this case? Statutory obligation by employer to employee. Due to that reason, ITC available. Got it? So these are some questions on blocked credits, and there is, take the book, there is one more section, section 18, and there is one illustration. Let's complete that also. Page 114. Page 114, there is one illustration in our regular book. Take revised book, page 114. Illustration: XYZ Limited is engaged in manufacture of taxable goods. Compute the ITC available with XYZ Limited for the month of October 2023 from the following particulars. Serial number 1, inputs A 1 lakh. One invoice on which GST payable was 10,000 is missing. So one of the condition for availment of ITC is that the person availing ITC should be in possession of tax paid document. So for this 10,000, can ITC be availed? No. So means out of this 1 lakh only 90,000 can be availed. Inputs B 50,000. Inputs are to be received in 2 installments. First installment has been received in October 2023, means this month only first installment received. So when we can take ITC? Only upon receipt of last lot or installment. So here 50,000 we cannot take ITC because this is only the first installment. Capital goods 1,20,000. XYZ Limited has capitalized the capital goods at full invoice value inclusive of GST, as it will avail depreciation on the full invoice value. Full invoice value including GST. Can they take ITC? No. On this 1,20,000 they cannot take ITC. Input service 2,25,000. One invoice dated 21/2023 on which GST payable was 50,000 has been received in October 2023. Now carefully listen. What is the date of invoice? 21/2023. 21/2023 means what is the financial year? Financial year 2022-23. For financial year 22-23, what is the time limit for availment of ITC? 30 November 2023 or date of filing annual return. So see the note third point. The annual return for the financial year 2022-23 was filed on 15 September 2023. So 15 September 2023, whichever is earlier is what? 15/9/2023 is the time limit for availment of ITC for this invoice. But right now we are in which month? October month. So can we take ITC? No, we cannot take ITC for October month. Out of this, like 2,25,000, 50 cannot be taken. So 1,75,000 only we can take ITC. You can see the numbers below. So we can take ITC only 1,75,000. So 2,65,000 is the answer. Understood? So this is like a question covering all the points in section 16. Then look into section 18. Input tax credit in special cases. Input tax credit in special cases. Come back to page 109. Come back to page 109. In this, section 18 deals with ITC in special cases. Section 18 subsection 1 talks about availment of ITC on closing stock. As per section 18(1)(a). So total 4 situations we can avail the ITC on closing stock. I have given there with example to understand this concept. Say this. On 8/8/2024, a person commenced business and he is liable to get registered on 1/10/2024. Thereafter, within 30 days, he made an application for registration. On 25/10/2024, he made application for registration and he got the registration certificate on 3/11/2024. Now, he is liable to pay GST. He is liable to pay GST from 1/10. From 1/10, he is liable to pay GST on his outward supplies. Before 1/10, that is 39/2024. Before 1/10, that is 39/2024, there is some closing stock. On that closing stock, he would not have taken ITC. Why he would not have taken ITC? Because now only he is liable to get registered, means at that time he was an unregistered person. An unregistered person cannot take ITC. But now, as and when he become liable to get registered, he start making the outward supplies and he need to pay GST. Using this closing stock only he will make outward supplies. Due to that reason, on this closing stock, whatever GST is paid, at that time not taken, now we can take ITC. Is it clear or not? What is that closing stock? What is that closing stock? Inputs, raw material as such, then raw material in WIP, then raw material in FG. These 3 raw materials, that is raw material as such, raw material in WIP, raw material in FG. These 3 raw materials, whatever is GST paid, that can be availed as ITC. Got it? But this raw material should have been purchased within 1 year prior. Means 39/2024 is a closing stock date. That closing stock should be purchased within 1 year prior. Means the invoice date for this closing stock raw material should be 1 year. Means 39/2023. So between this time, if it is purchased, then only we can take ITC. GST paid availed as ITC. For availing this ITC, whether matching is required or matching is not required. Matching is not required. Why matching is not required? Ariyar, when you were purchasing this stock, definitely you were an unregistered person. Wherefrom you can give your GST to the supplier. So naturally supplier cannot put it under B2B supplies, that is sale to registered person. Due to that reason, matching is not required. Not possible actually. So that's why they are telling matching not required. By when I need to take this ITC? After I get the registration certificate, within 30 days or with a further period, I will be filing ITC 1 and I will avail this ITC. Is it clear? After registration certificate, within 30 days or further period, I will file ITC 1, form GST ITC 1 and I will avail the ITC. Is it clear? Then how to avail this ITC? Not in 3B. I have to file one form ITC 1, and if the amount of ITC does not exceed 2 lakhs, self-declaration, I can only sign. Suppose if the ITC exceeds 2 lakhs, then I need to get a CA or CMA certificate. Now, from this, what is that you need to remember as a provision? When a person is liable to get registered and he makes application for registration within 30 days, he can avail ITC on inputs as such held in stock, inputs in WIP and inputs held in stock, finished goods. So before the date he is liable to get registered. You can see that 18(1)(a). A person is liable to get registered, page 111. A person is liable to get registered and he applied for registration within 30 days and he can avail ITC on inputs in stock, inputs in WIP in stock, inputs contained in FG in stock, and matching not required. On which date closing stock should be taken? Immediately before the date on which he is liable to get registered. Then go to 18(1)(b). You understood here 18(1)(a). Clear? Now 18(1)(b) you see, 18(1)(b). 18(1)(b), a person commenced business on 8/8/2024. He voluntarily made application for registration on 1/10/2024. Thereafter, he got the registration certificate. Now, from when he need to pay GST? 3/11/2024 he need to pay GST. Because he voluntarily got registered, whenever he get the registration certificate, he need to pay. Now see the closing stock before that date. What is before that date? 2/11/2024, see the closing stock. As on the 2/11/2024, same RM as such, raw material in WIP, raw material in FG, it should be purchased within 1 year prior. The GST paid can be availed as ITC. Here also matching not required, and here also it should be taken within 30 days or further period. And how to avail this ITC? Again ITC 1. And what if the ITC amount is up to 2 lakhs, self declaration? What if ITC amount exceeds 2 lakhs, CMA certificate? Now see these two charts and tell me what is the difference that you can find between these two charts. Situation, previous one is situation, liable to get registered and made application for registration within 30 days. In this case, voluntarily getting registered. In the previous case, closing stock date is before the date they are liable to get registered. But in this case, before the date they are getting registration certificate. But otherwise everything is ditto, same, correct? Now look into 18(1)(c). 18(1)(c). So remember, C for composition scheme. C for composition scheme. Say a person is under composition scheme up to 1/10/2024 and he is a registered person. He was under composition scheme and from 1/10/2024 he migrates to regular scheme. When he was under composition scheme, he cannot take ITC on inward supplies. But now when he go into regular scheme, he can take ITC on inward supplies, even on closing stock also. What is the date on which he migrated from composition scheme to normal scheme? 1/10/2024. See the closing stock as on before that date. What is the closing stock date? 30/9/2024. We need to see closing stock. And again, this closing stock should be purchased within 1 year prior. But what is the closing stock? Either raw material as such, or raw material in WIP, or raw material in FG, whatever GST paid. But in case of capital goods also they can take. In the previous two charts, no credit on capital goods. But in this case, even on capital goods also they can take credit. How much credit they can take on capital goods? So like depreciation. What is the depreciation for capital goods? 5% for every quarter or part thereof. From which date to which date? Date of purchase till the date of conversion. It is not disposal. Here it is not disposal till the date of conversion. See there, GST paid minus 5% for every quarter or part thereof. From which date to which date? From the date of purchase till the date of conversion. Okay. On all these things we can take ITC. And how to take ITC? Form GST ITC 1. And by when this form should be filed? Within 30 days from the date of migration or conversion. And same data, if the ITC is up to 2 lakh, self declaration, and if the ITC exceeds 2 lakhs, it's not 2 lakh 10,000, 2 lakhs. If the ITC exceeds 2 lakhs, CMA certificate. Matching required or matching not required? Definitely matching is required because he is a registered person. So at the time of purchase, he will give his details. So therefore matching is required in this case. Now tell me, what is the difference you can find between this chart and previous two charts? Previous two charts versus this. What is the difference? In the previous two cases, we could not take ITC on capital goods, but here we can take ITC on capital goods after reducing 5% for every quarter or part thereof from the date of purchase till the date of conversion. Another difference. Huh? Matching. There matching not required, here matching is required. Third difference. Third difference, apart from situation, third difference, they are unregistered, now only getting registered. Here already they are registered. Okay. Now look into chart number 4. Chart number 4. What is this? There is a registered person whose exempted supplies now became taxable. There is a registered person, so far they were making exempted outward supplies. From 110 onwards, they started making taxable outward supplies. Same. Before that date, so 39/2024, see the closing stock, which should be purchased within 1 year prior. Matching required. Raw material as such, raw material in WIP, raw material in FG, even capital goods, GST paid minus 5% for every quarter or part thereof, from the date of purchase till the date of conversion. On all these things, whatever GST paid, that can be availed as ITC through form GST ITC 1. Time limits, same, 30 days plus extended period. And this particular form, if it is ITC up to 2 lakhs self declaration, if the ITC exceeds 2 lakhs, that is not 2 lakh 10, ITC exceeds 2 lakhs, CR CMA certificate. Now tell me, what is the difference you can see between 18.1C and 18.1D? Ditto, copy paste, correct? Including mistake, it is copy pasted. So it is everything same, no change in that. But only difference is the situation. In case of 18.1C, it is composition scheme to normal scheme. Whereas in this case, exempted supplies to taxable supplies. Okay. Now, what is the difference between 18.1A, 1B versus 1C, 1D? 1A, 1B versus 1C, 1D. 1A, 1B versus 1C, 1D. 1A, 1B, unregistered person. Now only they are getting registered. 1C, 1D, he is a registered person. 1A, 1B, matching not required. 1C, 1D, matching required. 1A, 1B, no credit on capital goods, but here we can take credit on capital goods. Got the clarity about this? Now look into the time limit. What is the time limit for availment? So all these 4 charts, one point is common that we have seen, that inputs and capital goods should be purchased within 1 year prior. Okay. The above closing stock including capital goods should have been purchased within 1 year. Then in case of inputs, we have not reduced anything. Full GST paid, we are taking ITC. ITC with respect to GST paid on inputs can be availed as ITC. But in case of capital goods, ITC shall be GST paid minus 5% into number of quarters from the date of purchase till the date of migration or conversion. Is it clear? Then, so an electronic declaration in form ITC 1 shall be made by the registered person within 30 days or such extended time by the commissioner from the date of eligibility of availment of ITC under 18.1. Okay. So this is also common point, and this declaration shall be certified by practicing CACMA if ITC exceeds 2 lakhs. These are the common points in that. Now we are moving on to 18.3. So 18.1 and 18.2. 18.1 talks about availment of ITC and closing stock. 18.2 is about the time limit, 1 year time limit. 18.3 is in case of transfer of ITC. It's a theory discussion only. Listen, I am transferring my business to you. I have a business, I am transferring my business to you. How the transfer of business should be? With specific provision of transfer of liabilities. Means all the assets and liabilities should be transferred to you, not just the assets. Means it should be transferred as a going concern, like amalgamation in the nature of merger. All assets and liabilities should have been transferred, and you need to account for those assets and liabilities in your books. Then in that case, I will have some unutilized credit ledger balance, input tax credit, that can be transferred to you. That ITC can be transferred to you. For that purpose, I will be filing one form, that is ITC2. That ITC2 should be certified always by a CACMA, not when the ITC exceed 2 lakhs. ITC2 should always be certified, and what is that CACMA will certify? That this transfer of business is with specific provision for transfer of liabilities, like that they need to certify. As and when you accept it, that ITC will come into your electronic credit ledger. Is it clear? Now, Suppose if there is a merger of two companies into single company, say A Limited and B Limited gets merged into AB Limited, no problem, both A Limited and B Limited will file ITC too, the credit will come and fall in AB Limited. But what if there is a split, that is AB Limited is divided into A Limited, B Limited, then we need to transfer the ITC to two companies. In what ratio it will be transferred? In the assets ratio. We need to take the assets of A Limited, assets of B Limited, and we need to transfer the ITC. Is it clear? All these points are there, you see that. Read the first point, everyone. When there is a change in constitution of a registered person on account of sale, merger, demerger, amalgamation, lease or transfer of business with specific provision for transfer of liabilities, the said registered person shall be allowed to transfer the ITC which remains unutilized in his electronic credit ledger to such sold, merged, demerged, amalgamated, leased or transferred business. Simple. Whenever there is a transfer of business with specific provision for transfer of liabilities, from transferor to transferee, ITC will be transferred. Second point, read. Transferor furnishes details of such transaction on sale of business in form ITC2 electronically in the common portal with request to transfer unutilized tax credit in electronic credit ledger of transferee. So it is a form used by the transferor to transfer that ITC2. And third point, next point, a certificate of CACMA is to be furnished and the transfer details to be accepted by transferee. Correct? And next, whether any monetary limit is there, beyond this only CACMA should certify. No, nothing of that sort. Continue. In case of demerger, credit shall be transferred to the new entities. In what ratio? Ratio of net assets, whether ITC availed or not on such assets, because not on all assets. For example, land and building, there is no ITC. Correct? I am buying land and building here, no GST paid. That land and building also will be transferred in case of demerger. So see the total assets. Sir, net assets they gave. What is net assets? All assets minus ITC. You write there. Net assets means total assets minus ITC, because ITC only we are transferring now. We have not yet transferred ITC. So net assets means total assets minus ITC. Total assets minus ITC. Net assets means total assets minus ITC. Okay. Next. Now listen, if there is a death of sole proprietor, say there is a person, Mr. X, who is dead and his son has taken over the business of Mr. X. Now in this case, son should get a new registration. Yes, of course. Whenever there is a change in ownership, definitely the new person should get, even though the business is same, but they need to get a new registration because the permanent account number will change. So they need to get a new registration. Now in that case, from the father's registration to son's registration, can the ITC be transferred? Yes, it can be transferred. For that reason, so who will file ITC2? Generally ITC2 should be filed by transferor. Now where is father? Somewhere in heaven or hell. Now how can we call him? We cannot call his Atma Andal and he cannot file that. So that's why transferee only will log in into the old registration and will file ITC2. Is it clear? Read there. Transferor, change in, anything in your mouth pa? Chocolate, biscuit, etc. No, no, you can read, no? Read here, at least then it will go in your mind. Read. Transfer or change in ownership of business will include transfer or change in ownership of business due to death of a sole proprietor. Then one more point, transferor and transferee should be in the, which means if transferor is in Maharashtra, transferee is in Tamil Nadu and the business is transferred, can the business be transferred? Yes. If it is a e-commerce business, anywhere to anywhere it can be transferred. So it is just the website and the app na, anywhere to anywhere it can be transferred. But for that, so what is the condition? Transfer or transferee should be in the same state, then only it is possible. Then what transferee should do? Should get a registration in the state where transferor is there, then only ITC can be transferred. Is it clear? Next one. When a single registration gets converted into multiple registrations. Listen, I have say one registration in Tamil Nadu for 4 places of business, and now I want to go for separate registration. So far one registration in Tamil Nadu, now it will be 4 registrations. What will happen? From that single registration, the ITC will be transferred to 4 registrations. In what ratio? Read that and tell me. In what ratio the ITC will be transferred? Like demerger ratio, correct? What is the demerger ratio? Net assets, same, correct? See there, when a single registration gets converted into multiple registrations within the state, then also ITC against the single registration can be distributed to multiple registrations by filing form GST ITC 2A. And we need to take which ratio? Assets ratio as on the date of new registration should be considered for this purpose. Clear? And next, what is the new form for ITC 2A? What are the forms that we have discussed? ITC 1. ITC 1 for what? ITC on closing stock. ITC 2, transfer of ITC. ITC 2A, single registration to multiple registrations. Asset ratios on the date of new registration. ITC 2 to be certified by CACMA irrespective of amount. However, ITC 2A is not required to be certified by CACMA. In case of demerger, balance in ITC as on the date of transfer and ratio of assets on the date of demerger to be considered. So, in case of demerger, what happens is that, say, today demerger happened, but I will transfer the ITC to the units. For example, say this, AB Limited gets split into A Limited and B Limited. Now, the demerger happened today, but I am transferring the ITC to A Limited, B Limited after 1 month. Now, which assets ratio to be taken, today or after 1 month? You understood my question? Today demerger happened, after 1 month only I am transferring the ITC. Now, ITC balance or assets ratio, which date should be taken? For assets ratio, you tell me, which date assets ratio should be taken? Today's assets ratio, after 1 month assets ratio, read that and tell me. Today's, that is demerger date assets ratio, correct? But ITC balance is on which date? At the time of transfer, after 1 month. Is it clear? Read it once again. In case of demerger, balance in ITC as on the date of transfer and ratio of assets as on the date of demerger to be considered. Is it clear? Next, look into section 18.4 and 29.5, reversal of ITC on closing stock. What is this reversal of ITC on closing stock? This is actually opposite of 18.1c and 18.1d. 18.1c is what? Composition scheme to normal scheme. Composition scheme to normal scheme. Okay. And 18.1d, exempted supplies to taxable. Now opposite. Normal scheme to composition scheme. Taxable supplies to exempted supplies. In 18.1c, 1d, what we did? Availed the ITC on closing stock. Here what we will do? Reverse the ITC on closing stock. Is it clear? Apart from that, one more situation also you add, that is cancellation of registration. So, normal scheme to composition scheme, taxable supplies to exempted supplies, or cancellation of registration. In all these 3 cases, you should reverse the ITC on the closing stock. What is the closing stock? Same. Inputs as such held in stock, inputs in WIP held in stock, inputs in FG held in stock. Okay. How much is the ITC reversed? ITC reversed equals to ITC availed. How much ever ITC you have availed at that time, that much we need to reverse. Is it clear or not? And capital goods also. But how much reverse we need to do for capital goods? They are not telling minus 5% logic here. What they are telling, say you use the capital goods for 2 years. What is the total life of the capital goods? 5 years. 5 years means how many months? 60 months. So total ITC divided by 60 into balance life. Got it? Whatever is the total ITC divided by 60 months into balance life, you need to reverse the ITC. Is it clear? While availing the ITC, minus 5% for every quarter or part thereof. But while reversing ITC on capital goods, come on, ITC availed divided by 60 into balance life. Got the clarity about this? Sir, I am reversing this ITC. Okay, sir. What happens to the balance thereafter? That shall be lapsed. Say this, the balance in ITC after reversal shall be lapsed. Then why should I reverse? Why should I reverse? Fully let it be lapsed. Not like that. Suppose if I have a balance of 1,50,000 and how much ITC I need to reverse is 1 lakh. And 1,50,000 minus 1 lakh I reverse. Still what is the balance? 50. That will be gone. What if the balance in ITC is 1 lakh, but what I need to reverse is 2,50,000. Means that much of closing stock I have on which I need to reverse. Then in that case, how much I need to reverse? 2,50,000. How much is the balance? 1,50,000. That I will adjust. Remaining 1 lakh I will pay out of my pocket. For that reason only they are telling reversal is required. See the last 2 points. Last 3. If there is a balance in ITC after reversal, it shall be lapsed. If there is any shortfall for reversal, then such shortfall shall be payable using cash ledger. And we need to do this computation separately for CGST, SGST, UTGST and IGST. Then see the first point. Inputs and capital goods can be purchased any time on which ITC availed. If ITC not availed on such inputs and capital goods, then reversal shall not arise. Correct? Only if you avail ITC you need to reverse. What if I have not availed ITC? For example, blocked credit, no need to reverse. What if I have purchased capital goods before 5 years? No need to reverse. Why no need to reverse? Because the life of the capital goods is 60 months. There is no balance life. See the second point. If capital goods are purchased before 5 years on which ITC availed, then reversal shall not arise. Suppose on this date, on this closing stock date, if ITC, inputs invoice is not there. On this closing stock date, inputs invoice is not there. Then what should I do? Take the market value. If the invoice pertaining to such inputs is not available, then market value as on 31/3 can be considered, and practicing CAR CMA certificate is required in that case. Is it clear? Next, all these details of reversal needs to be reported in form GST ITC 3. Okay. For availing ITC on closing stock, ITC 1. For reversal of ITC on closing stock, ITC 3. So with that, we completed input tax credits, and there is a circular on replacement of parts. But before moving to this circular, I want you to prepare one table in your notebook. In that table, I want you to write the differences between 18(1)(c)(1)(d) versus 18 subsection 4. Okay. So write there, take your notebook, and give a side heading, difference between section 18(1)(c)(1)(d), section 18(1)(c) and 18(1)(d) versus section 18 subsection 4. 18(1)(c) and 1D versus 18 subsection 4. You prepare a table, particulars, small column, section 18(1)(c) and 18(1)(d), next column 18 subsection 4. I want you to search the information for these differences and update the differences. Come on, try. So it will be like a revision for you. You search both the places and identify the differences and update these differences. Come on. You write. First you write. Already it is there. Only you need to search and write. Okay. Then you will know what are all the differences, so that you will never forget it. If I dictate, no, you will write, but you will forget. I want you to search and write. Just 5 minutes time, please. Try this. Done. So write down in particulars. First point, you have updated the situation. First point, you updated the situation. Check whether you updated the situation. What is the situation for 18(1)(c), 18(1)(d)? Composition scheme to normal scheme. Then Exempted supplies to taxable supplies. 18.4 opposite. What is that? Normal scheme to composition scheme. Then taxable supplies to exempted supplies. That you updated? Super. Then what we will do with respect to ITC? Availment of ITC on closing stock. Here reversal of ITC on closing stock. Correct? Next, what is the form? Here ITC 1, here ITC 3, ITC 1, ITC 3, ITC 1 and ITC 3. Then CA CMA certification, CA CMA certification, 18(1)(c) 1(d). Yes, yes, if ITC exceeds 2 lakhs. Here yes, if ITC exceeds 2 lakhs. But in the next column, yes, if market value replaced with invoice value, right? Yes, if market value replaced with invoice value. Next, capital goods. How we will do in case of capital goods? Capital goods, that also you write 18(1)(c) 1(d). Capital goods, ITC availed equals to GST paid minus 5% for every quarter or part thereof. But in 18(4), what we will do? ITC availed divided by 60 months into balance life. Is it clear? Fine. Now you understood the differences between these two. Okay. Come back to page 116. Already we discussed circular on replacement of parts during warranty, and we are just discussing the additional information. Correct, very good. One more point also add. Good here. Time limit for closing stock. In case of 18(1)(c) 1(d), what is the closing stock time limit? You should have purchased it within 1 year. But 18(4), no time limit. No time limit. That also right. Time limit for closing stock in case of 1(c) 1(d) within 1 year prior to closing stock. But in case of 18(4), no time limit. Good. So that circular we discussed now, replacement of parts. Even if you have not understood that circular, don't worry. We are discussing now in detail related to this. Say this. Usually, goods are sold under the condition that it shall be replaced or repaired on account of defects during the warranty period. What is that we have understood? Whenever we replace the parts or goods during the warranty period, whether we need to reverse the ITC or we are not required to reverse ITC. Reversal of ITC shall not arise even if such replacement of parts or goods is without any consideration. That is section 7(1)(c) is not required to be invoked. And if any consideration is charged with respect to such replacement, why 7(1)(c) not required to be invoked? Simple. Even though it is disposal of business asset on which ITC avail, we avail ITC. On that replacement of part or replacement of goods, we avail the ITC. But it is not to be treated as disposal of business asset on which ITC avail. And what if we charge some consideration? Say during this warranty, when you replace, some nominal amount is charged. Will that become supply under 7(1)(a)? Yes. If any consideration is charged with respect to such replacement, then it is supply under 7(1)(a), and GST is payable on such consideration, and reversal of ITC in that case also shall not arise. Looking into this, issue number 1. Sleek is a modular kitchen supplier. They are providing interior decoration services to Mr. X. And what happens? Mr. X will make the payment of 8 lakhs plus GST as consideration. Now, Sleek is purchasing a part for replacement during warranty period. They are purchasing a part by Sleek for replacement to customer during warranty period, 50,000 plus 6,000 rupees GST. Can Sleek take ITC of rupees 6,000? Yes. And whenever they do replacement during warranty period, is it supply or not a supply? Not a supply. And can they enjoy the ITC? Yes, they can enjoy the ITC. Whether they need to do any reversal of ITC? No. Reversal of ITC not required. It is not a supply. ITC avail. So here you just write down ITC of rupees 6,000 not to be reversed. So that went off in printing. So ITC of rupees 6,000 not to be reversed. ITC of rupees 6,000 not to be reversed. Is it clear? Next, issue number 2. Say this, Lanson Toyota dealer is selling a car to Mr. X. But carefully you need to listen to this, okay? Lanson Toyota dealer is selling the car to Mr. X, a buyer, and the car is covered under warranty. The buyer paid 15 lakhs plus GST, and out of that 15 lakhs, dealer shared the money with the manufacturer. Now the dealer is providing free after sale service of 3,000. During this free after sale service, they are also doing replacement of part. Now you tell me, this 3,000 and 2,000 rupees dealer should get from whom? Manufacturer, correct? This 3,000 and 2,000 dealer should get from the manufacturer because they are not charging anything to the customer. Understood? Now, multiple scenarios we are seeing. Situation number 1, carefully listen. Lanson Toyota dealer, that is dealer, procured the parts for replacement by third party and charged consideration from manufacturer. Now listen, you are a dealer, step into the shoes of dealer. I am manufacturer. What you are doing? You are replacing the part. What you are doing with respect to that part? You purchased it from the market. You purchased it from the market, from a third party, and you replaced it during warranty period. Now in that case, so how much you will recover from me? How much you will recover from me? That 2,000 also you will recover from me? Correct. Plus that 3,000 rupees also you will recover from me, manufacturer. Now, step into the shoes of dealer and discuss. First you will purchase the 2,000 rupees worth of part. On the 2,000, let's take 18% GST, means 360 rupees you paid. Can you take that 360 as ITC? Yes. Why you can take as ITC? Even though you are replacing during warranty period, as per circular ITC available, so therefore you can take ITC on 2,000 purchase. Understood that part? That point you understood here. Then thereafter what you are doing? You are doing the free replacement plus repairs, servicing, and you will recover from me how much? 5,000. On that 5,000, what is the GST that you need to pay to government? 5,000 into 18%, 900 rupees you need to pay to government. Understood from dealer point of view. Now, see from my point of view, manufacturer point of view. As a manufacturer, how much I paid to you? 5,900. Can that 900 rupees I can avail as ITC? Yes. So look into that discussion, because in exam, they may ask from dealer point of view or they can ask from manufacturer point of view. So you need to know both. First, from dealer point of view, invoice for recovery of cost from manufacturer. So first you will raise an invoice to me. For how much you will raise invoice to me? 5,000 plus GST 18%. So how much you will recover from me? 5,900. And that 900 rupees you pay to government. You are a dealer. You pay to government. GST payable by dealer 900. Plus you are also buying the part. How much part you have purchased? 2,000. On that rate of GST 18%. That is 360 rupees you are availing as ITC. Understood? And whether you need to reverse this ITC? No. No reversal of ITC required by the dealer. Understood from dealer perspective. Now, from manufacturer perspective, what I will do? First, I made payment of 5,900 to you, dealer. You raise me invoice, now I paid. And in that 900 rupees, I can take as ITC. Understood? Next, second situation you see. Second situation. Now, what you are doing? This is what majority of the dealers will do. Maruti Suzuki, Toyota, etc. and all, they do this way only. That is, whenever there is no part, they will buy in the third party like market and they will do, and they will recover it from the manufacturer, because they will give lot of importance to the customer service. But some stupid car manufacturers are there like Tata and all. What Tata will do, you know, if part is not there in the stock, they will request the manufacturer, and the manufacturer will be sending that part. Until that point of time, our vehicle will be sleeping in the service center. You understood? And they will place an order with the manufacturer, and the manufacturer will be sending. That is situation to read there. If replacement of part is received by the dealer from the manufacturer. Now in this situation what happens? First I will send the part to you. I am manufacturer. I will be purchasing the part and I will be sending the part to you. Which means Are you spending anything for the part? Are you, dealer, spending anything for the part? You got it freely from the manufacturer, correct pa? Then how much you will recover from me? 3,000. You will not recover 5,000 because part you got for free. So 3,000 rupees only you will recover from me. So 3,000 into 18%, that is 540. So 3,540 you will recover from me. Clear? Now, manufacturer, what I will do? First, I paid 3,540 to you. Can that 540 I can take ITC? Yes. And that part you are buying, I am buying, manufacturer is buying, dealer is buying. Manufacturer is buying. Can the manufacturer take ITC on the part purchase? Yes. So please see the answer. Dealer, invoice for recovery of cost from manufacturer. You will just recover 3,540 from me and you will pay 540 to government. As a manufacturer, what should I do? First I paid 3,540, that 540 I can take ITC and I am buying the part, so I can take ITC on 360. I am not required to reverse ITC. Even though I am not replacing the part, I am not replacing, you are replacing, even then I can enjoy the ITC. I don't have to reverse any ITC. Next, third situation you see. Third situation, it is little different. For two-wheeler dealers and all, we see this. What will happen for two-wheeler dealers and all? First, some inventory will be sold because they can either sell the spare parts or they can use the spare parts as replacement during warranty period, anything they can do. So, first as a manufacturer, I am raising you invoice for 1,000 parts, 100 parts I am sending to you, 100 numbers. For example, one spark plug you need to replace. That 100 spark plugs I will be sending to you. Each spark plug is 2,000 rupees. Means I will raise you invoice for 100 into 2,000. How much? 2 lakh plus GST 36,000. Then what you do, out of the inventory of 100, one part you will take and replace during warranty period, which means that part I should bear, correct? But you replace from your inventory, means you will pay me for 100 or you will pay me for 99, only 99, which means I will give you a credit note for that one part. First I raised you invoice for 100 parts, now I will give you credit note for one part. Now what is the treatment in this case? First read the situation. 100 numbers of spare parts is supplied by manufacturer to the dealer at 2,000. Out of that, one spare part is used as replacement during warranty period. Okay, then what will happen? Now concentrate. First, from dealer point of view, you see how you got that part. Manufacturer, but it was originally purchased. So first, how much is the invoice for you? 2,36,000. So first you will take ITC on 36,000, correct? Out of that one part you are replacing during warranty period, means how much you will recover from me? How much you will recover from me? That part you will recover from me or you will recover only 3,000 rupees from me? Yeah, I already sent you the part pa, 100 numbers I sent you pa. Out of that one part you have replaced pa, then that part cost will you recover from me? No, already I sent it to you. Now what is there to recover? You will not recover from me, but you will pay me only for 99 parts. Means I have to raise you credit note for. Then one part I will raise you credit note. When I raise you credit note for one part, 2,360, you will reverse 360. Is it clear? How much ITC you availed? 36,000. And whenever I raise credit note to you, you will reverse 360. Is it clear? Plus 3,000 rupees you are spending after sale service. That you spent and you will recover from me na. So therefore you will raise me invoice for 3,540. That 540 I can take as ITC. Got it? Now see there. First, from dealer point of view, you see. Dealer shall pay 2,36,000 to manufacturer. Out of that 36,000, dealer will take a ITC of 36,000. And as and when manufacturer send you credit note, you need to reverse 360 rupees. And for recovery of that 3,000, you will raise invoice to me for 3,540 and you will pay 540 to government. Understood from dealer point of view? From manufacturer point of view, First I raised you invoice for 1000, that is 100 into 2000, 2,36,000 means I will pay 36,000 to government, correct? Thereafter I will give you credit note for 2,360 means to that extent 360 rupees my liability gets reduced. Whenever credit note is raised, my liability get reduced. What is the journal entry for this sale transaction? What is the journal entry for this sale transaction? Dealer account debit. Dealer account debit 2,36,000 to sales account 2 lakhs to GST payable account 36,000. Now when I give you a credit note, what I am doing? I am crediting you. Then what is the debit? What is the debit? Debit for sales returns. Got it? Debit for sales returns. So or debit for cost. So replacement cost account debit. How much replacement cost account debit? 2,000. And GST payable is showing a liability. So that I will reduce. I don't have to pay 36,000. I have to pay only for 99. Correct or not? So I will give you credit note for one part. So 360 will be GST payable account debit. Means my liability gets reduced. To dealer account 2,360. Got it? Next. Thereafter, you have raised me invoice for 3,540. That 540 rupees I will take as ITC. Next. Situation 4. Situation 4. Carefully listen. The dealer will replace out of the stock. The situation 4 is similar to situation 3. Now what you are doing? You are taking one part out of that 100 and you are using. Now rather than I am giving you a credit note, I will replace that part. Is it clear? Means I will refill that part. Replenishment. I will refill that part. Then what is the treatment? From dealer point of view, same, no change. Correct? From dealer point of view, no change. You will recover only 3,540 from me and I will take that 540 ITC. And I am sending you that part to you, replenishment. So, no GST payable on that. See there, dealer, not a supply, movement of goods under delivery challan. Manufacturer, no GST payable. Reversal of ITC shall not arise in respect of the part replaced. That is the situation 4. Then look into the next page, issue 3. This already I told you, whenever some extra money is collected for extended warranty, what is the treatment of that extra money? If the extra money is collected at the time of original supply from the same, that is you are buying additional warranty at the same time from the same dealer, what is the treatment? Treated as composite supply. But sir, it is not composite supply na sir. Yes, it is not composite supply, but it should be treated as composite supply as per CBIC circular, and therefore we will take the rate applicable to the main product, principal supply. In all other case, it will be treated as what? Separate supply and taxable at the rate applicable to supply of services. Now look into this illustration. MI manufacturer is selling the television to MI showroom, GST rate 28%, and they will sell the television to Chroma, a retail showroom also, and MI showroom may sell television plus extended warranty to customer Z, or the customer may buy the television from Chroma and buy the extended warranty from the manufacturer. Anything can happen. Now in this case, what is the rate applicable to TV? 28%. What is the rate applicable to warranty? 18%. Situation 1. Carefully read the situation 1. MI retail showroom sells television along with extended warranty for 28,000 to Z. Okay. So television 26,000 and extended warranty 2,000 rupees. Now what is the answer? Composite supply, extended warranty sold at the time of original supply, and the supplier of goods and supplier of extended warranty are same. So therefore even this warranty will be taxable at 28%. So what is advisable? Not to get the warranty like this. Now you read other 3 situations. Just go through that. Correct? In all 3 situations, the answer is same. What is that? Separate supply taxable at 18%. Is it clear? Next, because it may be same supplier or different supplier, same supplier, different time, or different supplier, same time, or different supplier, different time, the answer is same. Then look into one more circular, clarification on return of expired medicines, CBIC circular, that is drugs or medicines which are expired. What will happen? For example, I am a medicines manufacturer. I will be sending the medicines to you. You are a medical shop trader. I am sending the medicines to you. Now the medicines are expired. What you will do with respect to that expired medicines? You will return to me. When you are returning to me, what is the treatment in that case? In that case, I will be issuing you a credit note, because it is like a sales returns. I will be issuing a credit note. But the problem is, for credit note there is a time limit. What is the time limit? 30th November of succeeding financial year or date of filing annual return, whichever is earlier. So by that time I need to give you credit note. If I am not able to give you credit note by that time, then in that case what should I do? For that they have created another option. They are telling, whenever the medical shop returns the medicines to the manufacturer, it should be like a new sale made by the medical shop to the manufacturer, like that you treat. If credit note can be issued, well and good pa. If credit note cannot be issued, then only they are creating this alternative. You are a medical shop na, you raise invoice to me like as if you are selling to me. Already you have ITC on the medicines purchased. Now you are raising invoice to me. What is the sale price? Purchase price. Sale price equals to purchase price. You raise the invoice to me. So your liability will set off with your ITC. As you raised invoice to me, I will take ITC on that. Got it? Now what I will do with those medicines, expired medicines, I may process and sell or I may destroy. If I destroy it, the ITC is gone. Is it clear? Why ITC is gone? We have seen one blocked credit. What is that? If the purchased goods are lost, destroyed, written off, etc., ITC not available. Please read that. Drugs or medicines which are expired shall be returned to supplier. Usual trade practice in pharma sector. Option 1. Supplier may issue a credit note treating it as sales return, thereby liability of supplier gets reduced and recipient shall reverse ITC. Understood this? Second option. However, if credit note cannot be issued on account of expiry of time limit, then recipient can treat it as fresh supply made to supplier, and on that supplier can avail ITC on receipt of such expired medicines. If such expired medicines are destroyed, then what will happen? ITC shall be reversed as per section 17 subsection 5. Is it clear? Read that example, just go through that example. Correct. Already you purchased now from me. At the time when you purchase from me, that ITC you have na. So whenever you are selling to me, with that liability you set off. See here, manufacturer has availed ITC of 10 at the time of manufacture of medicines, valued at 100. At the time of return of such medicine on account of expiry, the ITC available to the manufacturer on the basis of fresh invoice issued by the wholesaler is 15. So when the time expired goods are destroyed by manufacturer, he will be required to reverse ITC of 15 and not 10. Whatever you are raising invoice to me, that much I will reverse the ITC. And for you, when you are sending me the medicines, 15 rupees is your liability na? Correct or not here? That 15 rupees liability literally are you paying out of your pocket? No, you are not paying out of your pocket. Initially I sent you na? Initially I sent you. At that time you have the ITC. Using that ITC you pay this liability. You got it? Nothing you are paying out of your pocket. Ayya, you have ITC 15 rupees ayya. For that liability also you are creating 15. So it will get knocked off. So nothing you pay out of your pocket. Got it? So with this we completed ITC.